Am I actually live right now or no? The Illuminati said Illuminati said shut it down. So I just checked my processes in the background, and it showed Microsoft Edge trying to do an update. Yeah. Hold on here. Why does this one say I'm live right now? What the fuck is going on with? I'm problems with YouTube right now. Hang tight here. Let's try that again. I know I'm getting. So let me ask you a question. If you're a supporter, if you are a supporter or higher, how's this morning's chart looking versus the chart that I posted for you last night? Pretty good, right? That's pretty good, right? I'd say it's pretty good, right? Does somebody want to? Here, let me check the Discord. I'm back up again. Sorry about the delay. I don't know what more you could ask for. I don't know what more. Even if it goes against us, what more can you ask for? So we now know what subjects to avoid on stream. uh, Andreic. That wouldn't shock me, man. That really wouldn't. Yeah, that's a good point, huh, Andreic? Nice little back test trade right there on the hourly trigger. Looking for some more upside here. Targeting next upside move targeting 513.12, 513.50. I will be honest here. There is probably some of that, isn't there? There probably is some of that. That shit wouldn't surprise me. No, it's Andre. Sorry, brother. Thanks for the correction. Every time I say Andre, be like, hey, it's Andre. Shut up. Am I pronouncing that right? I don't know. Let me know if I'm pronouncing that or mispronouncing that. I think it's Andre. Sorry, yeah. Ugh. Oof. It's perfectly okay. All right, so give me let me take a quick break here. Give me like just 5 minutes. Just want to stand up. I'm gonna get a cup of water. I've got some coffee in front of me. I need some water. So I just need like a 5-minute break. I'm gonna put on. So down below here, we've got NVDA. Did any of you get the update from last night on NVDA? Expect an upside move here in NVDA, and then a big roll down. Some kind of big move like this, and then an actual bigger move down. So leave that there. I think that's what I expect, right? I think it's like right here. A note on NVDA. I should have told you this last night, but I didn't. NVDA is in a downward move right now. But it is looking for a dip to buy. So you are a buyer of dips on NVDA right now, but not yet, in my view. But I think there is a buyable dip on NVDA. I just don't think this is the one. So I'm still in the thought process that we're going down here on NVDA. So just be aware of that if you're looking for the buy. You're gonna get a coffee? Okay. All right, right on. I'm gonna do the same thing. I'll be right back with you guys in a few minutes. I'm gonna put on some CNBC in the background. I'll be back in just a moment. Thought I had. Did I delete some of this crap? All right, hold on here. We're gonna put on Diarrhea TV for a few minutes.
I think you want to tag team on a reverse repo facility chart for tomorrow.
Let's do it.
Just think too. I want to say something here. All that fucking doom and gloom between yesterday and today, market's still going where it's supposed to go, isn't it?
Yeah, that's right. They're just a few blocks from here. That's why we have you here, Mike. Turning to the energy sector, while tech has grabbed all the attention, the energy sector is actually the top performing sector in the past month. For more on the state of the energy market, the key themes we are seeing and what we're learning, let's bring in our Brian Sullivan live from the annual CERAWeek conference in Houston. He's been talking to energy CEOs for the past 24 hours. Brian, what have we learned about the sustainability of this rally?
I think, Sarah, you and Mike may have talked about AI or Nvidia a little bit today. Just wild speculation on my part. And actually, that's a huge theme here as well. Because artificial intelligence and the data centers needed to drive all that computing growth. Jensen Huang of Nvidia was talking about just this. That energy, that electricity has got to come from somewhere. And there's kind of this come to AI Jesus moment here at CERAWeek where suddenly everybody's realizing, oh my gosh, the estimates for power demand growth are so high, we don't need to do this or that or that. We need to do everything. Kind of this all-in theme. And one other theme of this conference, Sarah, is that there's a lot of investors here. I've been coming to this for more than, 12, 15 years. And this year has the most investors of any year I've seen. Carlyle's here. Guggenheim is here. And in fact, last night, we sat down with Alan Schwartz, who is executive chairman of Guggenheim. And he talked about the mass amounts of money that are likely going to be made from energy and renewables. Listen.
I've talked about how I've been leading a big focus from Guggenheim on sustainability, and we think it's going to be the biggest wave of capital spending in the history of the world.
The biggest wave of capital spending in the history of the world. I mean, if that's not a headline, Sarah, I don't know what is. Okay, and by the way, another theme here is rising costs for electricity. As we build out renewables, as we combat climate change, we're kind of doing double duty, right? Because you got to build wind, you got to build solar, but you got to make sure that you also, the lights and the heat are on, even if the sun is not shining and the wind is not blowing. And earlier this morning, we chatted with one of Canada's biggest pipeline operators, have huge U.S. operations as well. It's a company called Enbridge, who's building out the renewables business. And I asked the CEO a very basic question. Why are natural gas prices going down, but all of our viewer and listeners' electricity prices going up? Here's what he had to say.
So in some respects, we're asking consumers to pay twice, and I don't think policymakers and politicians have been forthright on that front. Consumers are smart though, and they're saying, no mas, we've had enough of that. Let us kind of do a transition that makes sense realistically, economically, sustainably, and from a security perspective. So I think that's the issue.
So you're building two things, Sarah and Mike, effectively on top of each other right now, and that's why electricity costs continue to rise, even as the price of natural gas continues to go down. We've got a big lineup here. We got ConocoPhillips tonight. We got Chevron live tonight. We got Dan Jurgen live tonight. Probably some surprises thrown in there. It's been interesting. A lot of money, trillions of dollars floating around here at CERAWeek.
Yeah, well, we'll need it for the largest infrastructure expenditures in the history of the world, Brian. Appreciate it. We will follow right along.
Just a note here really quick before I take my break here. We're going to scroll down to, there's some stuff I want you to pay close attention to. So just for your gamma for the day here, leaving a little bit of a gap down below here, right? You can see that. Your local resistance, this isn't call wall actually. We'll just make this, at least we can change this a bit for you. Yeah, local resistance. Local support, local resistance. Still ping-ponging around in here, right? Just want to bring your attention to this. If you want to, you can see like big, huge moves down, right? We talked about that. Be flying in an airplane and then boom, immediate drop. Same thing right here. Boom, immediate drop. Same thing right here. Boom, immediate drop. Same thing right here. Boom. Not so much, right? Buyers stepping in. Whoop. Boom, immediate drop. So until we're above this 5180 right here. But there is some notes or something to take note of here. Number one, we're spending a ton of time here. Okay. You know what this looks like, right? It does not look like distribution. This looks like trying to find enough buyers for this next leg higher, right? Trade this new zone to the upside. And what else is happening here? Just so you can see, we have some developing upside calls, right? All the way up to 5,300. I don't see anything up here yet. I'd really like to see 5,500 develop, 5,600 develop. But what else is fascinating is take a look right here. So real support is starting to move up. Do you see that? No puts down here. Now, some of the gamma bros are going to tell you because there's no puts down here that it's dangerous for a crash. I agree with that statement. But also you see this compressing right here. This is also becoming very supportive for this expansion to the upside. This is telling you we're trying to get range expansion up here. Now, can we blast down below and have an actual legit crash? Yeah, we got that forming too. But at the same time, your real support is raising up. Whoop, raising up. It's now here. I realize we're leaving all of this down here exposed. I would still really like to see us come up here and bloodbath down, close that gap, and then right back up again and continue to the upside. All that stuff right there. If you are a seasonal trader and you're looking for that seasonal buy, I hope we get it. I hope we get that moment of weakness for just, even if it's for a day, 2 days, something like that. So just that's that gamma profile right there. I'll switch back to the main screen now for you guys. You know, why is that happening? Hold on here. Where's that? Bottom right-hand screen is the, oh, that's why. The chat box is muted. So it carries over to the trigger full screen. Chat box is not muted, is it? That's why it's not. I got to check that and make sure that I have that open. When I mute it on a different scene, it affects the regular scenes, transitions. Okay, so if you guys have really quick in the chat, if you want me to have a revolving chart down here in the bottom left-hand side of your screen, can you tell me in the chat really quick some tickers you'd like to see this morning? I'll go to you guys for your input. If you guys have a ticker that you want, let me know. What do you got there? Whoa. Make this bigger. SMCI. I got Q's there. SMCI. Hold on. Guys are going too fast now. SMCI. Target on SMCI 535.87. IWM, I can do that one. This is the one that I'm most interested in. IWM. PACB. All right, so far I got, I'll look that one up. I'll look at PACB later. PACB. Going down. PACB. There was some other one up in there. You're just curious in my thoughts? Okay, I'll look at it in a bit. I want to make sure I'm not putting anything up that's a low float. There's another one up there, too, that I missed. Mara. I can put Mara up. I'll do Mara. Ooh, nice. I like it. I like that it's blooding. Good. That was a good pick right there. You guys are probably like, why do you think it's a good pick if it's blooding? I fucking hate things that are already trending, so I really do like something that's like in a bloodbath phase. So we'll put Mara right there. So you can see daily triggers rolling down. When you see stuff like this on a ticker like Mara, it's it looks like it wants to really correct in a big bad way. If you want to get bullish on Mara, you're going to want to see the daily trigger come down and price to get above it, and then the hourly trigger to get underneath it. And then we can talk about a bull trade on that. But it's getting there. It's not there yet, but it's getting there. You definitely do not want to see Mara below $15.29 with the daily trigger and the weekly coming down upon it. It is very bad. We become like bear market for Mara. All right, I'll be back with you guys in just a few moments.
Of the moment.
That's right. Yeah, you just want to get the ticker in there, and you get in the filter, and you're all set. At least, although I have heard people say essentially it might have overshot. That basically now it just feels like everyone has one. So does anybody have one worthwhile?
You mean the partnership?
A partnership or a claimed connection. So.
I remember in the boom days of Beyond Meat, it was like that. Remember, every restaurant, every grocery. Not making any comparisons.
Let's not. All right. Despite all the news, the stock, of course, of Nvidia is down about 2% this morning, and on pace to break a 10-week win streak. For more on what we can expect from Nvidia, New Street Research's Pierre Farragut joins us live from the GTC. Pierre, it's great to have you. So what have you heard so far, if anything, that leads you to either reassess or confirm what you already expected about the pace of adoption of generative AI and the build out of capacity and I guess the durability of those things?
Yes, what Jensen really focused on yesterday during the keynote was like the next generation of chips, the new product portfolio. And what we saw is a chip that can train a model 4 times faster, that can do inference up to like 30 times faster, So still like a very, very, very high pace of innovation. Every 2 years, that's like the 5 to 10x kind of performance improvement in the chips is really what came out today. What does that mean? Well, in a world in which your next model is going to be 10 times larger, you will need that new chip that is going to go 4 to 30 times faster, definitely. Very good for NVIDIA. It also means competing with NVIDIA is tough. Because if you're a startup, if you're like a team inside Google or inside Microsoft and you're developing your own chip and you aim for a chip that is 10 times better than the NVIDIA chip, you know that the next NVIDIA chip that is coming up in the next couple of years, maximum, is actually also going to be 10 times better. So it's very challenging to compete with NVIDIA. So what I would take from yesterday is NVIDIA will continue to dominate the space, even if alternatives get into the market. There is so much demand that there is room for alternatives. NVIDIA still is at the top of its game for sure.
Yeah, and you know, I know coming into the meeting, you had been using for your price target of 1090, 1090 for NVIDIA shares, something about a sort of a conservative case for the rate of adoption. It still left upside. You were looking at out 2 years. Is that what you would stick to at this point? And I'm trying to define what the remaining investment opportunity is here for this part of this cycle.
Yeah, that's a very good point. So what's amazing about the world in which we are today, about like AI trend, is that we don't know what's next. You know, as Sam Altman said, the CEO of OpenAI, there is this veil of ignorance standing in front of us. And the next model, the only thing we know, it's 10 times bigger to train, 10 times heavier for our data center. But we don't know what it will deliver. And so we don't know if we are going to continue to increase the size of the model 10x after this one. So how does that translate into the supply chain? That means we have very high visibility on very strong demand until the end of next year. And after that, we'll have to wait and see. And so that's the reason why we have this prudent way to look at NVIDIA. And our take on the stock today is, if AI slows down, AI deployment slow down on the back of 2025, AI is still nicely valued. It's still like an interesting stock to own. So there is no like valuation bubble at this stage, despite the run of the stock. And if AI continues to really deploy very fast and grow like 50, 60% a year, the stock between now and 2027 still can double or triple relatively easily. So we still like the stock. But we want to remind investors that there is a veil of ignorance. We don't know what happens beyond 2025, and we need to keep an eye on that. And what does that mean? It means looking at how the capabilities of the models are evolving, how adoption is growing, and most importantly, how companies are capable of showing they can monetize these massive investments.
Pierre, does it make you like some of NVIDIA's competitors more or less?
So as a competitor to NVIDIA today, you have an easy market. If you have a very tough competitor, NVIDIA are very good at making the most of their chip, helping their clients, making the most of their chip with excellent quality software and ecosystem. So it's tough to compete with them. But there is such a need for more compute. Compute is a new gold rush that all credible competitors are actually doing extremely well. I have in mind AMD coming up as an alternative supplier of GPUs with a technology that is like a stack, an overall environment that is inferior to NVIDIA, but still sufficiently capable to get into the market with a very strong demand we see. We see chips being developed by large internet players like Google and Amazon. For now, they are like in the lead deploying. So we expect GPUs in 2027 to be maybe 2/3 of the market. So that's a lot of room for other chips to get into the market. So competitors are going to come in, are going to be successful, but they are not going to hurt NVIDIA. NVIDIA is going to remain in their dominant position given the strengths of their innovation pipeline today.
Yeah, dominant, but maybe not alone. Pierre, thank you very much.
Exactly.
Appreciate the time. All right.
The Nikkei, the Japanese stock market, back above 40,000 as the Bank of Japan officially ends its negative interest rate policy. We're going to take a look at what it means for the country's economy and the markets moving forward.
Plus, housing starts rebounding more than 10% in February, the largest gain in 9 months. We'll discuss the health of the housing market when we come back with the CEO of TriPoint.
I think what others can learn from my journey as a female leader is really resilience and perseverance. many steps along the way, I've experienced challenges and roadblocks, and having the ability to move past them, to celebrate the small wins, and take the challenges as they come has been a key part of getting me to this point.
Pro.
European markets mostly edging higher this morning with some economic optimism coming out of Germany. The ZEW Economic Sentiment Survey smashing expectations, reporting that more than 80% of those surveyed expect the ECB, the central bank, to cut rates in the next 6 months. But the big story today comes out of Japan. The country's central bank issuing its first interest rate hike in 17 years. The move was only to a range of 0 to 0.1%. It was a 10 basis point increase. And the Bank of Japan says it still expects accommodative financial conditions to be maintained for the time being. The dovish guidance caused the Nikkei to jump above 40,000 for the first time in 2 weeks, also prompted the yen to weaken past 150 per dollar. State Street calling the opposing moves a, quote, classic buy the rumor, sell the fact. MUFG said the weak guidance isn't really enough to draw further hawkish repricing, and Macquarie concluding that at the end of the day, it's always the Fed that rules and dominates the price action. This Bank of Japan Governor Ueda adds a whole new level of dovishness to a dovish central banker. So they make their big move to raise by 10 basis points, and they got rid of the yield curve control and buying ETFs. However, still use the word accommodative, and gave no guidance on further rate hikes and whether that will be appropriate, and still continuing to buy bonds or do QE. So this is about as dovish as they get. Clearly, the fear of not having sustainable inflation runs really deep.
It's so culturally entrenched in the Bank of Japan. They also want to just soften whatever perceived, pressures that might be caused by this when the Fed is likely to also be cutting. The Nikkei loves it. It's been one of the best markets for a year now. It's up 20% year to date. I think it's finally becoming also a little bit of a hedge fund momentum trade, or maybe a lot of one. So it's kind of interesting, even though it's not really, as much of a shift. It's enough of, the accommodative nature of this hike, if you can believe it, is definitely supportive of the
any
equities.
tightening got already priced in a long time ago, and now it's all about the dovishness and lack of a signal of whether more hikes, and that's why the yen sold off and went past that 150, which does make you wonder if they will have to
because that's been the ceiling for like 18 months. A couple times it hit around 150.
And while the weekend is helpful for manufacturing and certainly for the stock market, at some point it could potentially cause capital concern.
Yeah, for sure. All right, time now for a news update. Silvana Hanau has that for us. Hi, Silvana.
Hey, Mike, good morning to you. Israeli Prime Minister Benjamin Netanyahu said today Israeli forces must carry out a ground incursion in Rafah in order to destroy Hamas. He made the comment just one day after the White House said President Biden expressed deep concerns to Netanyahu about an operation in the southern Gaza border city where hundreds of thousands of displaced Palestinians are currently sheltering. Meanwhile, Hong Kong's legislature passed a controversial new security law today. It builds on one imposed by China following widespread anti-government protest in 2019. The new law introduces 39 new national security crimes and expands penalties that include sentences up to life imprisonment for the most serious offenses. Critics fear the law will have a chilling effect on civilian groups and Hong Kong's business sector. And FBI data shows crime rates are declining in the U.S. The new fourth quarter numbers show murders dropped 13% from 2022 to 2023. Violent crime and property crime also went down. The data is based on information from about 13,000 agencies across the U.S., Sarah.
Good news. Silvana, thank you. We'll take it. Ahead, why the potential for even 3 interest rate cuts from the Fed this year could be in question. Northwestern Mutual Wealth Management CIO joins us ahead of tomorrow's big Fed decision, and why he's getting cautious on large cap stocks. Stay with us.
Fiverr.
With an eye on the Fed decision tomorrow, our next guest sees a mild recession ahead and thinks even 3 rate cuts might be in question for this year, favoring small and mid caps as the S&P keeps broadening. Joining us now, Northwestern Mutual Asset Management CIO Brent Schutte. He oversees more than $280 billion in assets under management. Brent, it's good to see you. I guess to the degree there's suspense going into tomorrow, it's, how is Powell going to sound in terms of his characterization of this uptick in inflation, how tolerant the committee is of this, and then resetting the rate path. What do you expect, and I guess how much do you expect it to matter to the markets?
I think it matters quite a bit because most of the expectations this year, at least a lot of the optimism, has been based on rates coming down. And so if you look at CEO surveys, they list one of the big optimistic reasons for 2024, rates coming down. Look at the University of Michigan or Consumer Confidence Conference Board. They list rates coming down. I think the reality is inflation isn't moving lower. The pace is actually moving higher. You can see that in sticky CPI. You can see that in the Cleveland Fed median CPI. You can look at the distribution of PCE components rising 3% plus, being at levels not seen since the 1980s, late 80s. And to me, the reactive Fed, the data-dependent Fed, is not seeing what they want to see on the inflation front. And that's why I think they're going to have to put a little bit of dent in the optimism that's out there right now about rates possibly going lower. And I wouldn't be surprised to see the dot plot move to only 2 rate cuts this year, which is much different than when we were in January. But the market is still somehow higher, which I think is the big disconnect.
Well, that was just going to say that. I mean, it seems as if fewer and later rate cuts has been absorbed reasonably well by the market because it's sort of falling back on, both the resilience of the economy, at least as far as we can tell, earnings turning higher, and of course the whole AI excitement.
Yeah, I think the last thing is very big because most of the excitement that you've seen is in those AI stocks. The S&P is really concentrated, and it's been the leading index for quite some time right now, which I think the small and mid-cap comments you made about my likes, I think that's largely because I don't think they have participated to the extent. I think they've already priced in some sort of a mild recession. And I do think once rate cuts arrive, kind of like what happened in the late 1990s, those parts of the market will do relatively better than large cap. And so I think the market is in for a wake-up call. I think it will eventually have a moment where it actually sees a recession is still likely as the impact of those rate hikes that we had in the past continue to work their way into the economy, which they haven't as much yet because most of the debt in this economy was termed out or fixed on the consumer's balance sheet because of the impact of fixed-rate mortgages. But you're seeing that reprice, and consumer debt right now has interest costs have essentially doubled over the past couple of years.
So as we start to feel the impact of that, Brent, won't that hurt value in small cap stocks?
It possibly would, and this is not necessarily a timing call. I tend to think in 12 to 18-month chunks. And if you think back to 1999, this is a period that rhymes a lot with this. Small and mid dramatically underperformed going into that recession or towards the end of it as internet stocks, the concentrated S&P kind of ripped on optimism about the internet and what was going to happen going forward. As that recession kind of became more of a reality, those asset classes did a lot better on a relative basis. And then coming out of that recession, they did incredibly well, which I think kind of a path for what I think is going to happen in the future. And I do want to reiterate, I think it's a mild and shallow recession for a variety of reasons, but that will mean more of a mild decline in the equity markets.
Yeah. Also relevant that, small and mid, you said, did better relatively. A lot of that was large cap growth just getting smoked after the peak in 2000. Brent, appreciate the time. Thank you very much.
Thank you.
When we come back, the CEO of TriPoint Homes joins us on the back of this morning's housing data. We're going to get reactions for the spring selling season. Back in a moment.
to learn more.
Shares of Unilever on the move after announcing some big cost-cutting measures this morning, spinning off its entire ice cream unit, including brands Ben & Jerry's and Magnum, and slashing in the process 7,500 jobs. The ice cream spinoff is expected to be completed by 2025, with the new company planning to be headquartered in Amsterdam. Unilever CEO Heinz Schumacher is still weighing options on where it will list, but clearly the market likes it. He's been in a restructuring sort of turnaround mode since coming on as CEO, and investors were clearly looking for something bold. I would just say that Ben & Jerry's has been a particular headache. First of all, the ice cream business hasn't grown much.
It's
slow grower. But Ben & Jerry's, with its like autonomous board under the parent company of they have had legal battles where Ben & Jerry's sued its parent company.
Politically
because they take extremely progressive, one would say woke positions. They're almost a social justice company more than they are a delicious ice cream.
It's also interesting there's going to be a pure play ice cream stock out there. I don't think there is one except for Cold Stone, which is ice cream shops, but we'll see. I don't know. Also, I wonder if they tried to sell it. That would be the other piece.
A what?
You would think they would have tried to sell it. Maybe they
Private equity has already been in the ice cream business. Let's talk housing. Yesterday, new data showing home builder sentiment turned positive for the first time in 8 months. And then this morning, we got February housing starts and building permits both coming in above expectations as well. Now the focus turns to the Fed and how any change in monetary policy could impact mortgage rates and the housing market. Let's bring in Tri Pointe Homes CEO Doug Bauer. Doug, it's good to have you. Wondering about just the numbers today, if you can shed some light. There was a dip in January because of weather. Was this just a give back, or are you really starting to see some excitement around building?
Yeah, thanks, Sarah. You know, the early innings of the spring selling season are very strong. The consumer is engaged. Orders are going well. And there's really three factors that drive the spring selling season and really the home building market. I mean, the new housing market has been underbuilt since the great financial crisis by millions of homes. The resale market is locked, and that's our primary competitor. The resale market is selling about over 1 million less homes per year. And the last thing is the demand. The millennial and Gen Zs, which represent 65% of our buyers, they're just at the early stages of their formation. So the market conditions are very strong.
Clearly, there is a supply-demand mismatch, and that's been a big part of the story. Mike was talking about how strong these stocks, your stocks, home builders have performed, even in a weak housing environment. At what point does supply catch up with demand?
That's the million-dollar question, and I think the Redfin CEO mentioned this. I think it was yesterday. Until there's more housing supply put into the market, you're not going to see that catch up for a while. And with higher mortgage rates, it continues to lock in that resale market. And right now, new home builders represent over 30% of the total home sale environment. Typically, that's in the low to mid-teens. So, you know, right now, you know, all those macro factors line up for a very strong housing market for several years.
You know, it's pretty well understood, I think, that the advantage that the builders have, you can buy down the mortgage rate, you can compete better, and obviously, you know, you can create your own supply. That's what you do. But you have seen a relatively high percentage of homes that have had price cuts from their initial listing price. It just seems as if at some point we're going to get far enough away from the lock-in of mortgage rates that some more inventory is going to start to come out on that market.
Yeah, Mike, I mean, I think that's going to take a while with rates where they are, and as long as mortgage rates stay in that 6 to 7% range. So, you know, our focus is really to continue to grow scale where we have our operations and take advantage of that lack of supply as we look forward into the future.
So what happens to prices? Because the whole point of the Fed's hikes, one of it was to bring down prices, and especially on housing, which has been sticky. You clearly have still this big supply-demand mismatch. What's that going to do?
Well, interest rates really don't drive the demand of housing. It drives pricing that you alluded to, Sarah. So as rates go up, pricing has been stickier, not as elastic. As rates go down, it gets more elastic. What drives housing is really the job market, household formations, this demand environment that we're at. So I think until there's greater supply, this is a very fundamental economic equation. We need more supply, both in the resale market and in the new home building market. In the new home building market, we're starting more homes, as reported. Our company is guiding to 17% more deliveries in 24 over 23. So that growth engine is in place for TriPoint. As a matter of fact, we've been growing our book value per share.
All right. Here I am. Here, give me a couple seconds.
Those goals of growing book value.
Turn that down right there. That up. Break time. Be right back. Old man. Okay. So we're going to go over here and just look at trigger full screen. And what are we looking at here? Let's take a peek. Where are the real sellers at here, right? When volatility began. So let's take a look back here in time and just see where they all are, right? They're right up here. They're right up here at like 516.62. We know where the sellers are. They're way up here, right? That's where they started. And look at that. They're right there again. 516.62 right up there. And they came down a little bit over here. Slightly down a little bit more, right? 515.32 is where they are. So what do they want to do in here, right? They want to do the same thing, and they want to get more aggressive too, right? We don't have that much vol left, do we? As a matter of fact, let's take a look at the vol picture. At the money volatility. Let's take a look here and see what we can see. Cap screen. And let's look at the money vol. This is now, I've shown you guys earlier. This was from the other day, but I've shown you guys this chart earlier in the week and last week, right? And some of the vol picture has changed, hasn't it? You can actually see the at the money vol picture is actually going down now as of tomorrow. So you're going to expect, this is the 20th, right? So you're expected vol to go up into the 20th. We're actually expecting it to be maintained higher after tomorrow. Now they're saying, maybe not. Maybe we sell the vol into tomorrow. So today, at least, the vol picture, the at the money SPX vol picture is telling you no, right? It's telling you that you're going to expect vol to leave the market tomorrow. Your most volatile moments will be today into tomorrow. So we're seeing this blast up higher right now. And if we're going to have some vol come into the picture tomorrow, where would that place be? And it's probably going to be, right, looking back in time, up here at 515 and change. That would be your best trade for the volatility trade into tomorrow. Probably up there. It's your best trade. And then your next best trade, if they're going to push it down, is probably right here, right? So they pushed this one down already. And they're probably going to try to get aggressive right here, right? So they're not aggressive right here right now. They're aggressive up here right now, okay? So there's probably a seller going, hey, fuck you. We already sold this up here, right? So this is where we're going to sell it again, right? Or maybe even down here a little bit, get more aggressive, right? So there's two actions going on. One is going to be sellers stepping in right here, for sure, and sellers also being up here ready to go. So you kind of have the two places. So the first moment of volatility is going to be right where we are right now. Like right now, we kind of already hit that target. See that target up here? Kind of already hit it. See that little sneaky little trade right there? That's those sellers already stepping in going, nope, you're hedged till tomorrow until volatility kicks off or goes away. But I'll tell you this, even right here where we are right now, right, that that once tomorrow is done, that's kind of like the last day for them, for us, or buyers of volatility and sellers of market. This is their last chance, or at least the SPX at the money vol curve is stating that right now. So just for right now, I would expect, I'm going to tell you this, right? I'm going to say it really loud to you right now. Say it crystal clear. Sellers and vol bulls, this is their last chance. You know, right where we are right now. They sold it right here. This was the actual tick. Right there, you can see it. And they want their last chance at volatility. That's what they want. They want their last chance. And, you know, there is a time to kind of give in to that. I know that a lot of times out there, you as a trader, you're like, well, fuck that. I want to buy a dip and run it up to the moon every time, again and again and again and again and again and again. I want to do it on the daily trigger. I want to do it on the hourly trigger. I want to do it on the 1 minute, the 5 minute. I'm going to run over all these sellers. I'm going to run over all these vol buyers and all that. But I want you to know that every once in a while, they get a chance. You know, even if it's not going to result in a blast down in the depths of hell, they're going to get a chance. This is their last chance. This is it. This is their last chance. So here are their two places. You got your first place right here. We're going to write it up here for you, okay? I'm going to draw it in for you right now. We're going to call this young. What do we call these guys again? Young Jim Bros, right? Young Jim Bros. These are the guys that want to be, they want to be sexy Miro. They're not Miro yet, though. They're not older. Miro's got a few years. He's like, I've been working out a little bit longer than these young bloods. So these are your young Jim Bros down here. They're angry. They're like, let's go. Let's get it on. We're going to crash the market. We got the yen stuff going on. We got the end of, you know, the Japan being loose their money. I don't care about what their treasury's doing. And then down here, you also have, up here, you've got the old Jim Bros. These are the guys you really got to watch out for. These fucking guys up here, you know, they haven't been able to shine at all this quarter. We got the old Jim Bros. They're up here. Well, and matter of fact, we won't give them capital letters because they're just waiting. These guys are always cool. They just wait up here. They know what's up. They're chill. Young Jim Bros get aggressive. They're like, slam, 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 sell, 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 sell. Old Jim Bros like, I'm going to wait up here. I'm going to rain down some shit if they try squeezing this shit. So they're way up there. Old Jim Bros, young Jim Bros. I'll tell you what, these old and young Jim Bros, they know something that scares them. Especially these guys up here. These old Jim Bros know better. Especially in this regime. What do they know? You want me to tell you? They know that we buy vol into events right now. And when we go into an event, we fucking leave bag holders everywhere. We don't actually follow through with it right now, do we? So if you're buying vol into an event right now, like, yeah, this is fucking awesome. This is fucking great. Buying the vol. Everything is great. Everything is awesome. Volatility is now an asset class, even if it's only for the next 3 days. We're not holding the vol into the actual event, are we? They're like leaving you bag holding like the day before, and then you're getting fucked. In the market, the vol comes off the market. What happens when vol comes off the market? Anybody know? What happens? Straight up, right? Market fucking blasts, rips faces off. So I'm going to be kind of thinking here that if I was an old Jim Bro, I'd be hanging out way up here, not particularly right here. I'd be like, yeah, I'm gonna go up here and just chill out. And if I can, if they can squeeze this up today into before tomorrow's rate decision, this is where I'd be taking a position for that volatility into tomorrow. Not gonna be wrong on this. These young Jim bros are sometimes right, but the one if I was a buyer of vol, as the closer we get into tomorrow's event, the more I'd be flinching, and the more I'd be like, I don't know, can't drink the Kool-Aid right now. Every time I drink the Kool-Aid, I get fucking run over. So you can step if you want. I guess my point here would be if you want to go into a vol trade. This is one of the places. And if you wanted to wait, or if you wanted to like start here and then do a second trade here, that seems reasonable and rational. If you want that volatility trade one more time into tomorrow, this is your first place where the young Jim Bros are, and this is your second place where the old Jim Bros are up here. Do they have another chance? Into end of day today? Possible. It's 12:03 in the afternoon. When we get into 2:30 in the afternoon today, you'll see CNBC will run the headline, investors and traders await decision by the Fed. You'll see everybody get hedged up over here, and they'll pin this market down into tomorrow's meeting, right? So just be patient is the only thing that I would leave you with at the moment. You know how it goes here, right? Extremes on the downside, extremes on the upside. Don't mess around in the middle, right? So let's go back to a 1 hour chart. Let's just take a look at this. And let's see who's won these trades. I bet you there's there's got to be like a bear somewhere. It's like it's a big bear flag. Yeah, it's been a fucking big bear flag for like ever and ever and ever. It's been one big long bear flag. But anyways, my point here is this. My point still stands. Buyers, sellers, right? Buyers, sellers, right? Buyers, sellers. Sellers getting a little more aggressive. You notice that? Higher high, no higher high, no higher high. 1, 2, 3. Getting a little aggressive there, aren't they? So they're going to try to get more aggressive here, aren't they? They're going to get real aggressive down here and attempt to get that push down here into tomorrow. Do I think they get that push down there? I do. I'll give them that. They'll get that. I would like to see them get it anyways. But I don't think it leads to what they think it's leading to, which is that bloodbath, that doom and gloom. I don't. Now, they don't have a lot of time left for it to happen. So just as we get up into these moments here, it would not shock me to see right around like 2 p.m. or so, 2:30 might be the sell signal. 1:30 in the it usually starts like 1:30, or I shouldn't say that. Right around 1:30, the buyers usually come in. Like the bulls will come in from like 1:30 until 2, and then right around 2 p.m. you'll see that sell action in the market. So if you're a bull, you have until about 2 p.m. or you have been having until about 2 p.m. as of late. And so right now for the next it's 12:06. Buyers probably have another hour and a half to 2 hours of whatever it is they're doing. And right, bring this over here for you. Buyers probably have another hour and a half of buying action going on. And then right around 2 p.m., I'm going to expect the hedge bros to come into the market. Yeah, let's put this right here where they are so they can get smashed in the face. So they can get punched right in the head. Bam! Stand back, young bro. Stand back. And we'll see how this goes. Buyers pretty much have to like now until about 1:30, well, till 2 p.m. Right around 2 p.m., those sellers will come in, they'll get angry. They'll get stinky. Okay, I'm going to read you guys a note really quick. Give me a second here. I'm going to read you guys just a note here and see what we can get. Tight here. I'm going to read a few things to you. The SPX dealer gamma imbalance is more or less neutral. Slightly negative on Tuesday morning as markets are anticipating a 20-year bond auction at 1300 Eastern Standard Time. That's today at 1 p.m. It's already 12:08, so you've got the bond auction at 1. That's your first moment of vol. And then, of course, tomorrow's FOMC statement, which is foreshadowed by the vol term curve below. Two-year note yields are coming back by 3.4 points today, which is stabilizing markets. But the 10-year yields minus 1.2 BPS are less convinced and bracing for today's auction at 1 p.m. So be aware of that today. The auction today is scared. The market is scared of the auction at 1 p.m. So I told you earlier, 2 p.m. So today in particular, keep your eyes focused instead of 2 p.m. to the 1 p.m. hour to the bond auction. What else do I have for you? Let me see if I can see anything else here. So be aware of the bond auction today, 1 p.m. Give me one quick second here. I'm going to read some of the black box stuff for you. One quick second here. Man, I want to throw up right now. I'm about to throw up. Goldman Sachs is saying we now estimate we are in the buyback blackout window with 60% in blackout today and 85% blackout by the end of the week. According to GS, the most bullish case for Nvidia is $1,710. We read that to you again. $1,710 is the most bullish case from Goldman Sachs. That was this morning at 9:20 this morning. Goldman's Hatsus, despite this setback, the U.S. economy is still on track for a soft landing, defined as a return of inflation to 2% without a recession. The recent growth in employment numbers have reinforced our view that the supply-demand imbalances in the economy are abating. First, after another weaker than expected retail sales report, Q1 GDP growth is tracking at 1.6%, down from 4% in 2023 H2. Second, while non-farm payrolls in February grew, a preliminary 275K, part of the increase was due to the favorable weather. In January was revised down from 353 to 229. Third, the unemployment rate rose from 3.7 to 3.9%. And fourth, broader measures of labor market slack, such as the quits rate and our jobs workers gap, have continued to ease in recent months, so that a composite measure of labor market pressure has returned to where it stood in February 2020. Nordstrom, halted for volatility, is working with Morgan Stanley and Centerview in an attempt to go private. According to the Russian spy chief per TASS, French military units in Ukraine will be a priority target. NVDA CEO Jensen Huang, in a CNBC interview, says deep learning can create software under AI. AI will recognize the words and understand the meaning. AI can be used for healthcare and drug trials. Computer can learn to understand physics. Customers can integrate technology into data center however they like. TASS also saying the Russian side has information that France is preparing a military contingent of 2,000 troops to be sent to Ukraine. So be aware of that as well today. That is something material. Now, whatever Russia says, I don't believe. I'll tell you that right now. I don't believe anything that they have to say. Do I think France is going to inject troops into Ukraine proper? Probably not. Will they be prepared? Yes. They did it. Same things in the Cold War. You saw a buildup of UN, NATO troops, and U.S. troops along all borders with Russia and Eastern Bloc countries. GS, NVDA GTC 2024 keynote takeaways. The next gen data center GPU platform Blackwell expected to deliver up to 4 times faster training and 30 times faster interference than the current H100. Fuck. So insane. Like, various partnerships across enterprise software, healthcare, industrial, and chip design. New Nvidia and NIM and CUDA-X microservices. Ongoing initiatives in customer traction and automotive robotics. All in, we come away from the keynote with a renewed appreciation of NVIDIA's one, unique ability to innovate at data center scale, as opposed to at the GPU or chip level. This is all from GS, by the way. Large ecosystem and breadth of its customer and partner engagements, ultimately compelling position as one of the key enablers and beneficiaries of the ongoing build-out of generative AI infrastructure. Based on recent industry conversations that point to healthy demand and supply conditions, we are increasing our fiscal year 2026-2027 rev and non-GAAP EPS, excluding SBC estimates on average by 10 to 11% respectively. Bank of America March Global Fund Manager Survey. Bottom line, global growth expectations for Fund Manager Survey respondents are at a 2-year high as recession risks dissipate. Risk appetite among FMS respondents is the highest since November 2021. Stock allocation is at a 2-year high. There's a big rotation into European equities, emerging markets, that's AKA China, and financials. That's, or at least that's what they've been pushing, the narrative of, Bank of Japan, start moving your money over to China right now. They're going to have to start loosening right now. It's been a big coming across the wires past couple weeks now. Cash levels are up to 4.4%, leaving B of A bull and bear indicator at 6.5 bullish, but not yet extreme bullish. On the macro, 2/3 of respondents say a recession is unlikely in the next 12 months. Soft landing remains the consensus at a 62% probability, while 23% say no landing. That was 5% in October of 2023. 11% say hard landing was 30%, which was 30%. We had a 30% of people saying hard landing, now only 11% saying that. EPS optimism is at a 2-year high, and investor desire for companies to return cash to shareholders is the highest since July of 2015. On rates, risks, and crowds, 84% expect short-term rates to decline in the next 12 months. It's a big one. I want you guys to understand that. 84% of respondents expect short rates to decline in the next 12 months. 40% expect lower bond yields, was 60% in December of 2023. Inflation is seen as the number one tail risk. And that would be a velocity of inflation where we slam down on 2%, and then we slam back up. We start it's like vicious, right? Velocity and inflation. Listen to that. Sorry about that. I'm really sick, right? I'm not feeling well at the moment. I want you to understand that very, very succinctly here, okay? They're telling you something as a retail trader that you should pay attention to. And that is inflation is seen as the number one tail risk. Not inflation bouncing around 2%. Not inflation doing this right here. Nobody gives a fuck about inflation going like this. Like 3, 1, 3, Bueller, okay? So if that's 2%, nobody cares about that. They care about this. Inflation coming down at 2%, wham, and then immediately going like this. This is what they are afraid of right there. So I want you at home as a retail trader to pay attention to this, okay? This right here is what they want to see. As long as that's the status quo, we'll be safe in their view, at least in GS's view. Okay, so we've got long Magnificent 7 is the number one most crowded trade. I agree with that statement. That's from GS as well. When asked if AI is in a bubble, 45% say no and 40% say yes. I'm going to tell you something here on that 40% that say yes. They are likely younger professional market participants that have zero experience in previous markets. I kid you not. It's that simple. It's that simple that you have young professionals that have never been through a cycle of ramping tech. Have never been through a cycle of ramping a stock. I shit you not. They have never seen Apple go from fucking $4 to $27,000. And when you see that happen, you'll come back then one day when you're 50. I'm talking about professionals here. They'll come back when they're 50 and they'll be like, yeah, I've been through that once. No, it's not a bubble. And they're going to see that. Well, one other thing I've got for you here. B of A chart. Expectations for lower bond yields. Yields are waning. Just be aware that there are people out there that have not seen a ramp on potential fundamental changing of our future. And truly, if you thought the iPhone was cool, even if it turns out that it's a scam. And I want you to see this too. There is volatility here, but your next target to the upside is 51,550 on SPOOs. Oh yeah, we don't have a lot of time left, do we? 12:20 now. 40 minutes to get up to 51. Just call it 515 flat. We got 40 minutes to get up there. So, can you get my T on Tesla? You get them every night on the website. Every night I talk about Tesla, or at least 3 nights a week. Mondays, Wednesdays, and Fridays. You get Tesla. So you want to ask people from the community and have them help you out at the moment. So, let me get finished. What was my thought process where I was on here? B of A at least, or back to NVDA. If you think, I think we had this on this show. We discussed NVDA. Remember when NVDA first started taking off, and people were like, "It's gonna be a fad, or it's gonna be what? It's a bubble, and it's gonna be short-lived." And I was like, "No, like 750 is the target." And now we're hearing 1,700 is the target. I think that's easily doable. AI has the potential to change the world, and actually is an existential threat too, to some kind of war and danger. There's a lot of danger with AI too. But to say that it's like, say that time that it was going to be short-lived, that's been wrong. And you're getting a pullback right now in NVDA. I mean, you get a consolidation sideways pullback at NVDA. Do I think that that's trying to create bag holders? Probably not. It's probably going to just continue up higher. This is a fundamental change, whether you like it or not. I don't like it. I'll tell you that right now. I'm not a fan of where we're going with AI. But to just deny it is you losing. You're fucking losing. So I don't know what to say to you. Like, the trader hat and the Main Street hat are two different things. If you wanted your chance, you got it. It's here. What else? That's all I got. So old Jim Bro's up high. Young Jim Bro's getting run over right now. Spanked pretty hard. Hopefully get a little consolidation back here. A little pullback. I'd like to see like the squeeze up, pullback, and then maybe a quick drop, and then right up there. We'll see if that happens. They might just run it straight up into this bond auction at 1-2. I see 450. I see I like if you guys know what I'm looking at, like on SPX, I see 6,000 like December 59.60. December, March, at worst. Say it all the time. Keep saying it. I think you're out of your minds if you don't think we're going there. I think that Tom Lee is understating where we're going. Which lecture? I didn't miss that part of the conversation. I didn't see that. Jimmy, I didn't see any of that. Am I still on the chaos trade for tomorrow? Yeah, every time we get up there, yes. Fuck yeah. Every time we go up there, we're doing it all week long, right? What did we say last week? Told you guys last week on Monday, Tuesday, Wednesday, and Thursday. What did I say? I said trade the extremes. I said you buy the dips, you sell the rips. That's what you do. And then tomorrow, when the vol's done, we'll go back to trading the 1 minute shit. Simple. Squeezing out the bears one more time here. It's like clockwork. Do you guys want to see the chart from last night? Let me ask you guys a question. Those of you who saw the chart from last night when I said we're going up here today, we did it. We're doing it right now. I don't know what to say to you. It feels so bad. All that doom and gloom in the overnight, all that shit, like, didn't matter, did it? Again, 1 p.m. Got a bond auction. I love you, Marmot Burr. Literally. Who said that? I don't know who said that. Someone just said they're up 3 pennies or something. What the fuck's wrong? Hold on a second here. Let's take a look at hold on a second here. I don't know what to do anymore. Here, let's take a look. Save. This is. Sorry, I'm giggling. You guys get me all fucking. Hold on. Can I open that or no? This is the chart from last night. I gave this to you at 8 o'clock last night. I don't know. What more do you guys want? This is the chart down here from last night. Do you guys need more than that? You want hugs? I don't know what you want. I don't know what else I can do for you. I don't know what else to do. I've tried. I'm trying. If it goes the other way, we know where it goes the other way too, right? Like if it goes, like even let's say it didn't work out, we even know where the selling is, right? It's on the hourly trigger. So even if we didn't go up today, we're like, yeah, we at least know where the sellers can come in, right? I love you too, Momoland. I might throw up on the stream. I'm pretty nauseous at the moment. Just a heads up out there. What up, Blisswoods? I'm about to throw up right now. Like I might just hurl here. I'm like right on the cusp. If I had nausea, 10 was throw up. I'm about 9 right now. Oh, is it really? Okay, thanks for saying something. I'm pretty close to it. If I get that close, I might just mute the video so you don't see it at least. Thanks for saying something. Young Jim Bro's getting run over right now. I bet you they're hooting and hollering right now on Twitter. They gotta be. Copyright infringement. ASMR's puking, so stay on stream. Yeah, I'm feeling pretty fucking gross at the moment. Is this thing bouncing between all these charts or no? SMCI, QQQ's sexy, man. Q's with a double bottom on the daily trigger. Nvidia, baby, squeezing higher right now, bros. Drew that one out for you earlier. What up, NVDA? Crushing it right now. SPX coming up into resistance up here. You can see it right there. Just ripping some faces off. I'm going to throw the fuck up, dude. I'm not going to make this. Give me a few minutes.
It's 49% above its 200-day. So, like, give it a breather. Perfectly okay here. But again, I'm a long-term investor, and cybersecurity is not going to get easier to deal with. It'll only get harder. AI will be a tool that cyber criminals have at their disposal, and there's just going to be an arms race to keep up with that. This is the best performing of the cybersecurity names. Of all the names that exist out there, this is the one that I've owned and I'll continue to own. I think George Kurtz is just an incredible leader for the company and visionary, and I want to stay. So I'm long-term, and I'm not going anywhere.
All right, got it. CrowdStrike is a winner for Josh now and in the long term. Let's move over to our headlines with Julia Borson. Hi, Julia.
Courtney, former Trump aide Peter Navarro reported to federal prison in Miami this morning. Before heading in, he said he was the victim of political persecution, that he was proud to serve his sentence. The Supreme Court denied Navarro's last-minute request to avoid prison while appealing his 4-month sentence for refusing to comply with the January 6th committee subpoena. The EU's foreign policy chief said he's planning to...
Hey, Binky, can you send me a link to that video? I missed all of it, interaction. Can you try to get me a link to that, please?
The official said last week that those revenues could reach 20 billion euros through 2027. And James Crumbley, the father just convicted of manslaughter for a 2021 Michigan school shooting committed by his son, allegedly said his goal in life was to ruin the prosecutor in the case against him. The Detroit Free Press first reported the comments came from jailhouse calls he made to his sister. Courtney, back over to you.
Thank you very much, Julia. Appreciate that. Well, coming up, the state of the consumer. We'll tell you why Nordstrom is rallying today, plus the setup on Nike and Lululemon ahead of earnings this week for both of those names. Halftime is back in 2. The Dow is at the high of the session. Check out shares of Nordstrom as well. The stock soaring on a report. The retailer is trying to go private again. And sticking with retail, we have 2 key earnings on deck as well. Nike and Lululemon both reporting earnings Thursday after the bell. So all of this put together got us thinking, what is the state of the U.S. consumer? Obviously something important for the Fed, too, to consider as they have their meeting this week. Jim, I know you're not in Nike, but you were at one point.
Yeah. Well, Nike's a show me story right now.
Okay.
And I can't believe these words are going to come out of my mouth, but there is a legitimate question as to the brand supremacy at Nike.
Oh, wow.
I know. That's like, and it's a question to be answered by the company. I don't know the answer, folks. What I can tell you is at the September quarter, when they reported, this was the August 31st quarter, they came through with better inventories, better margins, better pricing. It looked like they were back on track. I got in the stock then. It shot up 25%. Courtney, I don't know if you remember, but the analyst community was falling all over themselves to raise price targets.
Yep.
Lo and behold, the November 30th quarter, they absolutely tanked it. And then the stock went down, and now it's below 100 as we sit right now. The question hangs out there, has Nike lost its mojo? I'm not saying it has, folks. I'm saying as an investor who would love to be in the Nike of old that did have brand supremacy, I need that question answered by the company in their earnings report when it comes out this week before I'll take a position.
Wow. Josh, I imagine you probably have some thoughts on Nike and Lululemon.
So it's true that the competitive pressures coming from brands like On are out there, and it's obviously something that Nike has had to contend with its entire existence. There have always been challengers, so I don't think that that's really going to have a huge impact on a go-forward basis. I think the trouble for Nike is just that it's so reliant on the global economy holding up and consumers in various parts of the world holding up. And then here at home, it's got, omni-channel ambitions, and, they want to be more direct to consumer, which I think makes sense. But it's harder. It's more expensive. Yep. It's a bigger marketing challenge. So, if you're up for the fight, stay long. And if you want to do something easier, there are easier stories out there.
Yeah, it is interesting what Nike's gone through with its DTC and wholesale, pulled back a lot, and now it's kind of dribbling back into wholesale in some of those accounts. Shannon, when you put it all together, are you worried about the U.S. consumer when you have such strong brand household names like Nike and Lululemon, or is that not really what we're asking here?
I think it's broader. I mean, I think you really need to differentiate between the, stock-specific, company-specific narrative and what we're seeing from a consumer perspective. And really, what you should be watching for is any sort of deterioration in middle-income consumer spending. And so high-income consumers remain engaged. Middle-income consumers, for the most part, although their basket has shifted a little bit and potentially become a little less discretionary over the last few months, they continue to spend and be very much engaged. And so lower-income consumers, some challenges, obviously some geographic concerns and considerations with Nike. I think on a go-forward basis, to Josh's point, there's always going to be kind of startup retail competition, but I think it's not, these specific companies' situations are not indicative, are not as important to me as looking at the underlying consumer strength and the fact that we continue to see spending entrenched within the U.S. economy.
Fair, and obviously most of the retailers just sort of wrapped up the reports. Many mentioned inflation in the fourth quarter, the majority of those, and then they turned out some pretty good results for the fourth quarter nevertheless, but looking forward, very, very cautious. By the way, Lulu is one of the biggest battleground stocks on Wall Street, so you can check out that story right now on CNBC Pro. Scan the QR code right here or go to cnbc.com/ProPick. We will get those earnings after the bell on Thursday. Up next, the real deal on a steel deal. The Cleveland-Cliffs CEO sounding off earlier today on CNBC. Jim's in the name, but you knew that already. We'll get his reaction. And coming up on Thursday at 1 p.m. Eastern, join the virtual CNBC Equity and Opportunity Forum. We'll talk to corporate leaders about how they are navigating DEI efforts. So scan the QR code here to register, or again, visit cnbcevents.com/equity and opportunity. Halftime, we'll be right back. Welcome back to halftime. Shares of Cleveland Cliffs are higher. The company's CEO speaking to David Faber earlier today, saying he does not think a deal from Japan's Nippon Steel to buy U.S. Steel will go through because it doesn't have union support. Jim, you own Cleveland Cliffs. What did you make about the conversation with David Faber and or the deal itself? Good.
All right. Take that one. Nope. Wrong one. What did I mute that one? Mute that one. Old man, break time. I love the old man. I hope I look that good. But I'm an old man. I hope I look that good. Squeezing up higher now to where the old gym bros are to the top end. I'm going to assume that there's panic from the young gym bros. They're like, oh, shit, I didn't do my leg workouts. We got to leave it to the old boys up top. Throw your underwear out to the crowd. Oh, yeah, young trader. Take the money and run up here. Take the money and run up here. Look down below, right? Local resistance at 5180. You know they like to sneak in here and send it down to the depths of hell down here. We can go higher. Just remember that they go up here and they sell it down. They go up here and they sell it down. They go up there, they sell it down. They're going to try to do the same shit up here again. Place to take the money and run. You don't care if we're going to break out or not. I want to talk about that real quick, okay? We're going to switch over. We're going to switch over really quick. I fucking love being right, by the way. Fucking gets me hard. Okay. So terrible. Okay. So down here. Again. Trade the extremes, right? Come on, brah. Trade the extremes. Okay, so just so you know, okay, just to highlight this one more time. Come in over here, come in over there, come in over here. A little bit lower lows. And even if we were to squeeze up, even if we squeeze up here, we get a new high, 5,200, and then we come down. You know, there's like this part right here where you just like, eh. Let me explain that better for you. The trigger screen. So we got the young gym bros down here. We got the full squeeze going on right now. Turn to the scene of the crime. What I would say to you here would be, when we have a trade like this, see how beautiful that is? You have this major squeeze. And I always tell you guys, when we get these big squeezes off of the hourly trigger, what do I tell you? Same shit that I tell the bears, which they don't want to believe me either. All that shit comes back. And then we go up again. Just be aware of that, okay? Even if we're going to continue higher, all that shit always comes back. Okay? All this, especially when it's straight up, like, boom. So just be aware of it. If you're a bear, you know what's up, right? And you can see it right now. There's a little bit of selling there. Doesn't mean we don't squeeze above either. It just means even if we squeeze above right now, boom, right there. Still gonna come back. They're gonna test this 5-minute trigger over here. Every time. Don't be like the fucking Kool-Aid drinking bears. It's going straight down, cap, and it's never coming back. No. It always comes back. So just be aware of it as we get up here. It's now 12:47. There is a bond auction at 1 p.m. Next 13 minutes or so. Congratulations if you made a bunch of money. Super congrats to you out there. You didn't have a Sunday night for Monday Tesla update. If I have to go find it, I'll be upset. Well, let me find out, because I think it was done Sunday for Monday. You could be right. I might be wrong. You could be right, and I might be wrong. I swore I posted it on the Sunday for Monday. So you don't get Mondays on Monday. You get Sunday for Monday, and then you get Wednesday and Friday. Maybe I should be more clear on that. I will check, though. If I didn't, I will check. And I will get you one. You want me to do one right now just to get it out of the way? I feel like I could ask these questions, then I'm like, go back and I'm like, they're lying to me. They're lying to me again. Yeah, Tesla's on Sunday it's like because it's Sunday coming into Monday. You get it Sunday for Monday. All right. You guys are freaking me out. You guys want it today though. How about this? I'll get it done for you today. Hold on a second. We'll do one today. Give me one quick second. I'll write a note. And I'll have Tesla done again for today for you. All right, so at some point today, if you are a supporter or higher, I'm going to give you an update for Tesla that is on an hourly basis and a daily basis. I'm not going to give you the 4 hour, I don't think, but I'm going to give you the 1 hour and the daily basis. So you'll have an update today for Tesla. That's both supporter and pro trader so that everybody's on the same page with Tesla. Bond auction, 1 p.m. Be aware of it. It starts at 9 minutes. 9 minutes. I'm going to put on the squawker right now for that auction. We'll get that going. And we'll listen into the auction results. While that's going on, we're going to play the
this whole area of
GTC financial analyst, or the GCC.
You know, the type of systems that we're going to see in the next several years, 2-3 years, is unimaginable compared to today. For the reasons I described. There are some
your Nvidia
internet data
bonus chart from last night. How's that working out for you this morning? Let me know in the chat. Did anybody read the Nvidia bonus chart last night?
Synthetic data generation.
Anybody out there?
Other reinforcement learning. The amount.
Did any of you read the Nvidia post from yesterday?
Today we have one computer training on data. Tomorrow it's going to be 2 computers.
That's right. Say it loud, Addy.
It's multiple.
Did I draw with crayons? Goddamn right I did.
Okay, so that we could do that as quickly as possible. Some really exciting, groundbreaking work around the corner. All right. The one thing that we're certain is that the scale of our GPUs, they want to be even bigger. The SerDes of our company is world class. NVIDIA's SerDes are absolutely the world's best. The data rate and the energy consumed, the data rate, you know, the picojoule per bit.
I'm throwing up here in the background. When I'm not here, I'm throwing up.
It is the reason why we're able to do NVLink. Remember, NVLink was because we could not make a chip big enough. And so we connected 8 of them together. This was in 2016. We're on
NVDA ripping faces off from a low this morning of 855, 853. Now trading $50 higher at 893. I'm expecting a sell at 900.
They are together as far as I'm concerned.
Sell at 900 is what I'm actually expecting right here.
This close together?
A little bit lower.
No.
It's like $900. So we're close to there right now, just so you know.
76 ways. And the SerDes are so low energy anyways.
I love you guys out there. I love you too, Addy.
We could make even closer chips.
Am I taking shorts here? Let's take a look. I'll take a look. I might take one with you. Hold on.
You know, when you break up chips, you know, the goal.
What I don't like is that this GTC hasn't ended yet. I'll say that. I don't like that the GCC hasn't ended yet. I'd really like to see this shit, the Q&A, just stop.
To do so.
Seriously.
You start by building the largest chip ever. Otherwise, why didn't we do multi-chip back in the old days? We just kept pushing, right, monolithic as far as, and the reason for that.
HYG just fucking ripped faces off this morning.
Allows for the programming model.
VIX now trading $14.09.
Geeking out, NUMA.
What do you guys want? Some like 17 Cs?
Right. So you don't have NUMA behavior. You don't have weird cash behavior. You don't
on VIX. You guys looking at 14 or 17C?
Differently depending on the nodes, the systems they run on. We want our software to run exactly the same wherever they are. And so
SMLR turning around to the upside.
The first Blackwell die. We connect the two of them together. The technology, 10 terabytes per second, is insane.
Hold on, am I on the wrong fucking? Hold on a second here.
Link before. That's 10 terabyte per second.
Scratch that. Scratch that I'm saying that about VIX right now.
Otherwise,
yeah, VIX is at 1405.
That link. And so
VIX starting to turn around here, consolidating, holding its own. Like the buy vol crowd is like, fuck you, we're buying vol here.
It's the largest co-os in the world.
We don't care where price is going.
You know, because the first generation co-os was already.
SMLR looking extremely bullish right now. Extremely bullish
that we have is
on SMLR.
The volume ramp demand.
NASDAQ breaking 18,000, baby. Woo!
We've had plenty of visibility, and so Colette's absolutely right.
Old Jim Bros getting scared right now. Their panties are in a bunch at home.
TSMC very closely. We are geared up for an exciting ramp.
And this is, I'm going to say one thing to you. Let's look at a trade here really quick for where we are right now.
Oh, bummer.
Wow, thank you.
Come on.
Aaron Rakers at Wells Fargo. I really appreciate all this detail. I'm actually going to dovetail off this last comment because today you started the conversation by talking a little bit about Ethernet and how Ethernet with ultra.
I love Ethernet.
Yeah, so I want to understand.
I love Ethernet.
NVLink, 576 GPUs now interconnected together. This idea of the fabric architecture, where does that play relative to the evolution of Ethernet, your Spectrum 4 product, this move to 800 gig? I'm just
500 Ps for Friday.
Whether or not you
500 P
with Ethernet.
You're a bear. 500 Ps for Friday. 20 cents.
The algorithm is actually very simple. First,
there's 16 cents right now.
You possibly can.
Should we look at Monday maybe?
So big that if you added one more transistor, it would literally fall on the ground. That's algorithm number one. And look at the chips that we build. They're
28 cents for 500 P for Monday.
If possible,
get another chance right now.
Together. You're not going to connect four of them together. That's not going to happen. But if you can, connect two of them together. And that's the Blackwell invention. We now know how to build dies that big.
I mean, you guys have, you got a chance right here.
You're going to have all kinds of weird NUMA effects.
Monday puts.
You might as well go to NVLink.
28 cents, 500p.
Once you get to NVLink, the question is...
You're on Twitter all day long. You're talking about all this shit that's coming.
Okay. You can't...
Where is it at?
Like this. But if you have NVLink, then the next part is build NVLink as large as you can, modulated by power and cost.
500p, we're trading 515 right now.
Direct connect.
This is your last chance.
Not because
this is it.
Optical transceiver.
You're a bear.
Fashion optical.
That's all you got, man. Vol rolls off tomorrow. You only got one. You only got one perfect chance. This is it. You got it right here.
Because you can
wish upon a star. If you're a bear out there,
now
I'll post it on Twitter.
576.
Oh, I never posted the live stream. Shit. Oopsie.
But that's only 576 GPU chips. That's not enough. And so we're gonna have to connect multiple of them. The next click after that, the best.
You're a bear. Last chance for buying some vol.
The second best you have is Ethernet with an augmented computing layer on top of it we call Spectrum X.
Poots.
So that we can control the traffic that's in the system so that we don't have these long tails. Remember, as I said, the last one to finish determines the speed of the computer. This is not an average throughput. This is not like all of us individually are accessing hyperscale and our average throughput is good enough. This is literally the last person who finishes that partial product, who finishes that tensor. Everybody else is waiting on them.
Shortly expecting the results of the 20-year bond auction.
I don't know who it is in this room that's going to be the last, but
Treasury when issued yield comes out at the top.
We're going to hope that that person doesn't hold up, right? And so we're going to make sure that last one is we push everything to the middle. We only want one answer. It all shows up at the right time. Okay? And so that's the second best. And then you scale that out as much as you can. And that's going to need optics and, so on and so forth. Yep. There's a place for all of it. There's a place for all of it. I think if anybody's concerned about optics, don't be concerned. I think the demand for optics is very, very high. Demand for repeaters is very, very high. We didn't change anything about that. All we did was we made computers larger. We made GPUs larger. Can we take one more question? This is so much fun.
Treasury when issued 20-year yield 4.562% before the
One last question from the buy side, Jensen. You've talked a lot about I'm sorry.
Where is he? Oh, there he is. Hey, Will.
Yeah, hey.
I will.
Sovereign AI. Is there a way to sort of understand what you're going to do for the United Arab Emirates? That would be one question. And I guess my second question is I'm going to go home. I'm going to see my
91-year-old
mother. Mm-hmm. How can I try to explain to some 91-year-old, what accelerated computing? I guess I've got a good answer the first question. I'll figure out the second one. Thanks.
Okay. Yep. I don't know what you were going to say on the second one, but on the second one, I would say use the right tools for the right job. Yeah. And right now, general purpose computing, you're using the same tool for every single job. Literally, what you have is a screwdriver, and you're using it from the moment you woke up to the moment you go to bed. And so you start with you brushing your teeth with a screwdriver. It probably works. I haven't tried it, but it probably works. And so you just use that one tool the whole day. Now, of course, because you're going to use that one tool for the whole day, over time, humans have gotten pretty smart. And so we made that
Now, just be careful here. You see how this market is just the whole market is disappearing right now for this event.
It becomes useful for all kinds of stuff. And you could also use it to clean the bathroom and all that kind of stuff. And so one tool. Was that the answer?
52-week bill high yield 4.81% forecast. Previous was 4.69%.
The CPUs.
None of this is bad, by the way. This is all good. The bond auction was good for bulls. If you want to know.
The parallel things.
Bond auction was good. US 20-year bid to cover 2.79. Previous 2.39. Fucking hand in the market, dude. These fucking. I'll tell you fucking what, dude.
Except for graphics.
These fucking. Fucking.
Java is largely single.
Auntie fucking Yellen is like. Auntie fucking Yellen is like. Japan's doing what? And fuck you right now. I'm showing up to the auction today.
Video
oh yeah, it's an A+. It was an A fucking plus if you want to know.
Percent of the
I haven't seen what Andy said, but it was great.
Of the runtime. Do you guys understand?
Old Yellen came in and said, "Fuck you and your fucking Japan doom."
The pixels one.
It's my market.
And we said, haha, look at that. How interesting. Why don't we create something that's insanely good at 1%?
It sucks to be a bear. Fucking. They totally fucking scamming this whole fucking market, dude.
Good at 1% of the code. And we go create applications or find.
I need a yell and suck it. Hold on a second. See if I can do this in the background. Hold on here.
Processing. Artificial intelligence. Make sense?
Hold on here.
That's why accelerated computing, data processing, so on and so forth. Where 1% of the code is 99% of the runtime. And that's the reason why we get such great speed up. All right. Your
Sovereign AI.
Sovereign AI. every country has their own natural resource, and that natural resource is called their intelligence. It's in their language. You know, India.
Oh man, dude, yeah, it's not easy being a bear right now.
Language
It was so much better when like the Fed and the Treasury Department was on Team Bear. It was so much easier. It was like bulls coming in being like, "Oh, this is going to happen. That's going to happen."
It's digitized. It's not actually on the internet. It belongs to
Jerome would shit down your neck.
go create their own sovereign AI.
And rip your head off, shit down your neck as a bull, discard you to the side of the road. Bears are like, yeah, get them.
You name it. Companies, countries all over the world realize that this is their natural resource, and they shouldn't let it.
Bears, dude, like they're just waiting for it again.
Their natural resource back to them in an automated way.
Now you got like from the top rope, yelling coming out from the top rope
for free, and import AI. They now realize it ought to be the other way around, that they should keep their own data and then export AI. And so export the AI of Korea, export the AI of Malaysia, export the AI of you name it, Middle East countries. And so we have export control limitations on our products. And in most of the areas, the answer is it's not export controlled. And if there's any export control, we can still work with the U.S. government and make sure that the export is going to be fine. But number one, just make sure that we're compliant with export control. And in some countries, we have to offer degraded products, or that I didn't say that right, or lower specification products. But anyways, number one, just be compliant with export controls and help countries around the world to be able to do this. It's a very big market.
Hold on, I'll pull some.
There are going to be AIs that are going to be trained and continuously refined for just about every culture in the world. Yep. Thank you. Do you guys? No. Thank you very, very much. I appreciate Colette and I appreciate all of your support and interest in the company, and this is really quite an extraordinary time. It's not usual that we get to live through a time like this, where the single most important instrument of society is being reinvented after 60 years. That a new way of doing software has emerged, and you know that software is one of the most important technologies that humanity has ever created, and that you're in the beginning of a new industrial revolution. And so, the next 10 years you definitely don't want to miss. All right, thank you very much.
Wow, that was a pretty big end. That's a good end right here. So just a note, I said to be good to get puts after they finish the GTC for Nvidia. They did just finish. So be aware of that. And he did say something important. He said, he did say you're at the start of a 10-year revolution, or a new industrial revolution with AI. I am in agreement with that. Robotics isn't there yet, and it won't be there, I don't think, for a long period of time unless they have a major breakthrough. But at least from the software computing side, I agree with that. Be careful here. We had the bond auction was A+. We also note that even though we didn't get blasted down, that this is probably the place, the last chance for bears to buy some vol, buy some puts, whatever it is they're going to do. There are some really cheap puts for tomorrow and Monday. I know that you guys out there piss a lot of money away. 16-cent puts for 500 for Friday is dirt cheap. Cost of doing business. That's all it is. Cost of doing business. Then you also have 28-cent or 26-cent puts for Monday. I think they're 500 Ps for both that I'm listening to you right now. If you want to put some hedging onto the market for tomorrow's rate decision and feel comfortable like you've got something, what I would say to you would be there is a risk of selling the news on the events before we get there. So if you see a roll that takes place from now into tomorrow, You can either be taking the money and running that right before we get into the event, or taking the money and running if you get that one fast down move. Take the money, monetize, and then even if we continue to roll down later, we get a rate hike or some shit like that. That's not the trade. This trade right now is not the trade for Doom. This is a trade for buying vol into an event. You take the money and run before we ever get there. You don't diamond hand like a monster and get all crazy and worked up in my stream inside the chat. Chase Winter. You're breaking. You're going to come back down and try to test the 5-minute trigger. If you want to be more, tactful with buying puts here or buying vol, you are looking for price to get underneath the 5-minute trigger, right? Get underneath the hourly trigger, and then be looking for a new low right here to actually take that trade. So you need all that staircasing down to get more bearish. If you want to know what I expect to happen here into tomorrow, I expect we go down. I expect we go down into tomorrow. So I'm bearish here into tomorrow. I am bearish. And I do think that whatever the event is tomorrow, listen to me closely here. I do think that whatever happens tomorrow is going to be the catalyst for a seasonal low for the market to buy. So if you want to hold me to something, I think that you're going to get a bloodbath. And I don't care what they assign the news to it on. I don't care what the reasoning is. I don't care if it's a rate cut. I don't care if it's a rate increase. I don't care if it's no rate hike. I don't care if it's the Fed speak or whatever happens. I don't care what the fuck it is. But I'm assuming here that there'll be a catalyst for a seasonal low coming out of the Fed meeting tomorrow. Another note, I'm going to do one other thing for you here. I'm getting sick again, feeling it again right now. Give me like 5 minutes, and I'm going to talk to you about another trade that I haven't talked with you about. I've been meaning to, and I haven't had the time to talk to you about. Give me just a few minutes. I'm going to talk to you about one more trade, okay? One more trade here.
aren't big just really haven't been performing well, especially when there are interest rate concerns.
Well, what's going on there, Trader Podcast? What's going on, you big doggy out there?
They're just not.
How are you doing, brother?
Emerging technology.
Good to see you.
That may be a little bit more overlooked.
I love you, Trader Podcast.
Gosh, if this economy keeps going the way it's going, and if the Fed has to,
what up, no?
The economy is doing this well, that typically is a good environment for small cap. And we think that small cap core, small cap growth side would be a little better for that, because we are a little concerned about small value and their exposure to community.
So we got the one trade, right? So we got the one trade. We finished one trade. Now we're looking at a downside trade. Oh yeah, dude. Good job, Trader Podcast. We posted that trade last night, brother. So now we're working on the last vol trade for the Bears, but I got another trade for you. We gotta like post. We have like a post OPEX, post Vixpiration trade. Give me a few minutes on it, and I'll be right back with you guys. Sorry, this looks so horrible. Doesn't really look good, does it? You know the drill if you're a bear, right? grind, step it down, right? Place you right underneath the hourly trigger on the close on tomorrow, right? Just like, the bullshit, right? Come on down. Weak. Blast down here, right? Ooh, scariness down in the close for tomorrow. I'm sure that you guys already know the trade. You don't need me to show it to you. It's some kind of nonsense like this. Some kind of diarrhea. Do you guys see it, right? I don't need to leave this diarrhea up here. I hate having to draw this out for the Bears because we already know it's going to go. I'm going to delete it right now, but you guys get the gist, right? It's terrible even saying that. Pin the Bears in. All right, give me a minute. I'm still working on this trade. Give me a few minutes. One other thing down here too. Bottom right screen. So NVDA. One other thing down here. be very conscious down here. So I've got us rolling over and down into tomorrow. I've got us selling 900. Sell the news on 900. Now, I got to tell you guys something. This is a 1 hour chart right here. I got this up, right, for a down move. I want you to know something. You know, if they buy this shit down here, if we do anything like this, where we come down here and check that hourly trigger, and if we get a new high right there, okay, new high, get out of the way, because that shit's going to go moon. So I want you to pay attention to that, okay? So we're going to come back down here and check. Come back down here and check this hourly trigger right here, okay? You understand what I'm saying? This is NVDA. We're going to come back down here and check that hourly trigger. If that hourly trigger holds and we go up for a new high, it's going to come back down and it's going to do this. It's going to go. You're going to come back up. You're going to come back down. And if this holds and you catch that new high, watch out, because this will be a precursor to NVDA just blasting, like fucking blasting. So just be aware of that. Even though I have us breaking through, you guys got projections from me that are always in advance, right? You got the target right here. We're a little bit lower than we should be. I think I said 900. But then I've got us going down here, right, to 850. So just be aware of that trade right there. But remember, we use the triggers, right? So if the triggers are sitting here, this is the same as this morning for the bears. On the flip side of this trade, I said to bulls this morning, right? We know where the bears are. They're on the hourly trigger. If we beat the bears on the hourly trigger, we're good to go to the upside and complete the rest of that trade. Same thing happens down here. Come down here. If they get beyond this right here, we will see that 500, that 850 down below here on NVDA. Just be aware of it. Be aware of the hourly trigger. Hourly trigger on NVDA currently sits at 879.89 and 878.58. Remember, every squeeze, especially a big one, off of an hourly trigger, not every, but like 90%, come back to retest that trade for continuation to the upside. They won't just continue higher, and you're seeing that pullback right now, checking down below on the hour and half-hour trigger. Just be aware of it. Note that people are going to put the hedge on for tomorrow for doom and gloom. They get one more chance at it. It was a beautiful trade. That NVIDIA trade was a gorgeous trade. Absolutely stunning.
The switching costs so high, which does not bode well for competitors that are in the market, which is why you saw the negative reaction in AMD stock price, just because you did have NVIDIA not only with the GPUs, but also the CUDA software that's used by a lot of developers. And now this entire package, you know, with pre-built AI models that they're offering, the license that we just talked about at $4,500 per year per GPU. So that adds up and makes it even more difficult for companies to switch. And I thought it really telling that Jensen Huang said today, quote, "We run everything." That's a pretty bold statement, and maybe, I guess, a rethink whenever we just refer to this company as a chip company now, when really they are claiming they're more algorithm and software first.
Yeah, that might be a little uncomfortable eventually for AWS and for Microsoft Azure. Christina, thank you. By the way, you can catch more of NVIDIA CEO Jensen Huang's interview with Jim Cramer tonight on Mad Money at 6 p.m. Eastern. Well, NVIDIA is an investor in my next guest company and just announced an expanded partnership with it at GTC yesterday. That company's Databricks, current valuation of around $43 billion. Also on the Street's IPO watch. Joining me now in an exchange exclusive to discuss all of this, CEO and co-founder Ali Ghodsi. Ali, good to see you. So many NVIDIA partnerships getting floated around out there. I saw Snowflake said they had one too. So what's special about yours?
What's really special is that customers are coming to us and saying, we want to build our own generative AI models. So there are these really smart ones out there like ChatGPT. Everybody uses them. But enterprises want their own so that they can compete with their competitors and have their own IP. So we're probably the vendor on the planet that has built the most number of custom AI models for our customers, and we do that on NVIDIA chips. And we're excited about the Blackwell 200 that's coming out, and many of the other movements that are happening in this GPU space. So business is booming. Everybody's interested in building their own AI models today.
Are you comfortable that you see the limits of NVIDIA's ambitions here and where it's safe to partner versus where, I mean, if they're saying, if Jensen's saying they do it all, are they going to do what you do?
Well, look, I think they're amazing at that particular thing that they do. They do also span and do many other things, but, it's a big market. The TAM for AI is going to be gigantic, right? It impacts pretty much anything on the planet that's happening. So there's going to be room for lots of players. And, if someone should be worried, it's probably, Databricks is probably not number one on the list.
Yeah, I agree. Based on what I see, that makes sense. Now, a couple of weeks ago, you were saying that you expect the price of accelerators, and that's just the chips part of what's being used right now to develop a lot of these models. You expect the price of that to come down in the next couple of years. Is that still your expectation? Because it sounds like part of what Jensen is saying about NVIDIA is, hey, we do a lot more than just sell accelerator chips. And by the way, people are going to need a lot of this technology for inferencing as well.
Yeah, so I wasn't commenting on how NVIDIA will do. I think NVIDIA will do fabulously. I'm just commenting on the price of GPUs, right? The supply of these GPUs is just increasing. There's just so many vendors that are coming to the market with their own variants. There's been so much demand for these, and I think the supply will increase this year, and we're already seeing it when we talk to the folks that sell these. Before it was, you have to commit to me and buy lots of them 3 years in advance and pay for them 24/7. Now negotiations are sort of lightening up, and they're saying, hey, how about you just commit to just having them for 1 year? Or how about you buy them for 6 months? And the prices have also come down in the negotiations. So that is happening. Now, NVIDIA is on a tear, and there's no doubt about it.
Ali, in what industry do you expect we're going to see the needle-moving productivity gains in AI show up at the macro level first?
Yeah. Look.
All right. We're going to take a look at Cap's screen down here. And this is my screen down below. And what I want to, I wish I could show you more in the background, but what I really want to show you here is, this is a great way to look at some Vixpiration. We got Vixpiration coming up tomorrow. These are the last 2 Vixpirations, I believe, and we got the third one coming up tomorrow. But what I want to key into you, this is the day before Vixpiration. And see how they ramp up volatility? And they murder volatility after Vixpiration, right? Kind of the same thing here, right? They ramp up volatility and they murder the VIX. And we have a new one coming up right now. And you've got what happening? Slightly different right now, right? But we are before Vixpiration. See that? Before. Today is before Vixpiration. So the question becomes, are we going to roll this down into Vixpiration and then kill it, right? So we've got the Fed meeting tomorrow. Hope we can get a low down here tomorrow. You get your Vixpiration, and then you get the ramp up and out of Vixpiration. Now, right now, looking at where price is, looking at where we are right now in price, it looks strong, right? This looks like we're ramping or murdering the VIX before we get to Vixpiration tomorrow. So that's some cause for concern. A little bit different, right, this time? But my point here is that we have a lot of fuckery around the VIX. So let's see if we can see anything on the 9-day. Let's check out the VIX 9-day expiration. Let's take a look at it here. This is the VIX 9-day. And just let's take a look at this, right? Let's look back here and see what's going on. We come on down. Loves that daily trigger down there, right? Loves bouncing off that daily trigger. And we don't have a spike in the VIX today, do we? So this is when you hear me talk about what I expect out of the VIX. I'm sure there's a bunch of vol traders out there that are like, I just keep buying this shit and it goes up, right? Keep buying this shit, it goes up. And right now we're kind of there. Now there is this hourly trigger rolling down on the VIX to the downside. But it does show me what? We have the potential, shows me that we have the potential to do both things. That we have the potential here to make a nice upside move and a nice downside move for VIXpiration. So if you're a bear, don't have any fear just yet, even with all this stuff that's going on up top. Even all this stuff that's going out, like you're like, oh, I'm about to be short here, Cap. It's about to squeeze me out some more. It's possible, but just keep an eye on that VIX. Keep an eye on that VIX into tomorrow. If we squeeze up into tomorrow, if we squeeze up, look at this. They're trying. Look at NVDA. They bought this shit like it was nobody's business down here. Look at that. Bought that shit like it was nobody's business. Keep your eye out. We didn't quite hit 900. We hit the top on NVDA was 897.15. But we didn't quite hit the 900. So you could possibly even see into this close today a sell the news moment for the bulls, where they actually blast us up, right? And then you get your actual like you can squeeze out every fucking bear, and then you get your VIXpiration trade. So just be aware of that. Keep an eye on NVDA as it trades 900, or if it trades 900, keep an eye on it. If we do begin to trade higher and we do begin to get higher highs, if you want to know where that is, let me see if I can show it to you. So SPX has 5180. That is, let me put this up here for a minute. Hold on here. This is when we need our trusty levels. I'm going to give you a couple more targets to the upside. There's 520 right there. There's red. It's red. We're going to put two more boxes up here for you for targets. One right here. Make that one yellow. That one yellow. $516.50 would be first target. And I will say something. If they run us up into, oh yeah, Trader Podcast, I guarantee it that they are. Yeah, so 900 is top on NVDA. 900, whether you know it or not, is top. We didn't tag it yet. We hit 897, so there could be like one more just like, push us up, hit 900, and the actual sell was right here tomorrow. So be careful. Not be careful if you're a bear or anything like that. Just be ready to jump in again if possible. Any thoughts on Goldman? I went over Goldman earlier this morning. They were very positive. I don't know about go off, but Goldman's calling for 1,700. I think 1,750 on NVDA. I'm always looking for that fuckery. If you're like the snow trade, it's like a hanger-on trade. Sorry, like there's. You know what I should try to do is bring Winky on. Because Winky will tell you the truth. There's only a few companies that are going to do this shit. Oh, I thought you meant Goldman as the, sorry, GP grabber. I did not go over Goldman, the company, or the ticker. I was going over some Goldman Sachs statements from this morning. I think we're rotating back into. Okay, it's time out here. So I think we're rotating back into risk. personally, from looking at the PPOs, PMOs, and the market breadth, I see a rotation back into risk, and that would include financials, Goldman Sachs. I think, though, the low is tomorrow, not today. I think it's tomorrow. I hope it doesn't get front run. I hope that we get a low tomorrow, that there is some blood, some kind of like just volatile weakness. They get their these bears get this nice low that people can enter the market, and then there's a moment like, how do I explain this? There's a here. Let me come back on screen right now so you guys can tell if I'm talking. Hang tight here. There's like a post. What does Vol say? Vol says there's a post like event hangover. So you got like bulls and bears, okay, and they get very emotional around these times. So gather around. This is a fireside chat. Gather around, youngins. This isn't every time, okay? But I want you to know that dealers, market makers, dealers, they provide the market for you, okay? And we get very wrapped up and emotional as market participants and whether the market's going to go up or go down. So when we come into volatility, when we come into, doom and gloom, let's say that Jerome says something really nasty. Let's say Jerome says something really awesome. Yeah, they'll chase those events or those things. But right now, coming into those events, they have provided the liquidity for you and I to have a feeling onto what's going to happen. If that doesn't happen, they wrap up. The dealers will wrap up that trade, even if the price goes down or up. And so the idea here is you have less participants going forward after tomorrow. And we don't like, we've got some vol for the rest of the week. We got some other stuff. We got end of the month stuff, end of the quarter stuff. We got some cool like expiration stuff. We got some really cool. We've got what, the JPM collar is not pertinent at the moment, not important, or the top strike is not important right now at the moment. The bottom strikes are, but the top strike isn't really like a magnet or a repeller or anything like right now. It's not like anti-magnet or magnet. But even on end of quarter, end of month, the last day, we've got some really cool stuff with that, right? They put a big hedge in the market. They counterbalance trade it with a bunch of 0-day calls. Then we got new quarterly flows that come out the first 2 weeks. My point here is this. These liquidity providers, right, for your puts and your calls, they wrap that trade up. All the fervor leading up into these events usually subsides afterwards. So you need renewed volatility afterwards, whether that's positive or negative, for continuation for more market participants to enter. Even when we get those new participants, there's usually a reset period. Could be 1 day, could be half a day. Sometimes it's, like a few days later. But my point here is these dealers will wrap up that trade on you regardless of renewed interest. And so it's sometimes called the post, like event hangover. So even if we squeeze up today, is my point, whether we squeeze up today and then roll it down into tomorrow, whether we roll right here where we are down into tomorrow, there will be a moment here where this whole entire trade is wrapped up and gone. And there'll be like this like repricing. Even if more interest comes in, they have to chase a trade and all that kind of stuff. Just know that the dealers are like, yeah, we're going to fuck both of these bulls and these bears if we can. They would love to fuck you both, reset the trade, and have you retrade it again. So you have to come back into the market. So even if your thesis was right, whether it was up or down, they don't care. They reset the trade on your ass, and then you get to take the continuation trade afterwards. Just be aware of that into all of this stuff, right? The Fed minutes, the expiration, the end of month flows. And remember this too, like there's still a pin on the market. Not a pin, but the magic hand in the air that's like, we got this trade on that we want to print into end of month. Yeah, we did our OPEX, but we're at the end of quarter. We got a bunch of trades on that we want to print. Like you'll see them park the bus once again into the last day of the month or a quarter, quite heavily. So just be aware of that as we come into the end of the month. Have I looked at the Goldman? Have I looked at the Goldman chart? I have not, although I haven't recently. But I will if you want me to. Let me take a look at it, GP. So I'm like really sick here. I feel really terrible. I might actually have to end. I'll leave the stream up, but there might be a moment here where I won't be on stream with you. I got to give you a heads up on this because I'm really feeling like shit right now. Let me take a look really quick. I feel like dog shit. Like I feel like I got run over by a fucking truck. So do I like GS here? I do. I want to see a successful back test. So it's coming down right now. Maybe you're wondering why it's coming down right now. I want to see GS come back and retest. Success. So this is a prime. This is a good trade to look at. We'll look at it right now. Okay, so let's look at GS. GS just keeps grinding, right? Higher and higher and higher off of its one-day trigger. Let's take a look at it right now. Now, we do have something that's concerning here. I do not like seeing daily velocity going against price on Goldman Sachs right now. I actually don't like that. I'm not a fan of it at all. Let's look at some prior examples of this with Goldman. And I want you to see this here. Goldman looks great right here, right? And what happens? Rips faces down really fast and then an upside move. And you can see it right here on this flat velocity here. I like this velocity. This is great. It's a great trade right there. But when this velocity starts getting funky down here, we're kind of right here, aren't we? Like right there. So right now I'm not a fan of, I think this trade with Goldman is dangerous, and I think it's easy for you to see Goldman between very soon to be whether they get a new high or not. They come back down and blast through and trade 362. So for me, to be a buyer of Goldman Sachs, I would be a buyer at 362.33. Personally, can they continue to grind higher and get a new high? Yeah. Can all of this building up mean something to the upside? Sure. But for me, seeing this velocity, sorry, I'm going to throw up. Seeing this velocity at near zero, the divergence in price and velocity, I think it goes higher, but I think you're going to have a moment of weakness in Goldman. So I would say be to the deep, yeah, agree too, Jimmy. God, I can't believe I feel like this much shit. Goldman, I'd be not that it can't go up here. It can squeeze. It's just a very volatile trade in Goldman Sachs. And I would expect that if it's squeezed, it's going to get sold. Maybe I should say be different on my Goldman thesis. I would say on Goldman, if it squeezes, sell the fuck out of it. If it bloodbaths down to 362, buy the fuck out of it. Where it is right now, I think is a game of danger for both bulls and bears. I don't think it's the place that I would want to own it or even trade it. It does. Goldman does really well on like bloodbaths. I would rather be a buyer on a Goldman bloodbath. We've seen that on all of their ERs, right? They like set a really cool tone. They get a bloodbath, and then it's a great buy. So here for me on Goldman, I got nothing for it. Even if it goes up, I got nothing for it going down or up. I don't like the divergence in their daily velocity for me to be a buyer. I know. I'm not feeling well right now. I can't tell you guys, like, I didn't want to stream today. I'll be honest with you. I don't feel good. I feel really bad. Now, I'll leave you with this, too. Before the day at 4, now I feel really sick. I think I'm going to take a quick break here. It's 1:45 in the afternoon. I will have for you expectations for tomorrow before 4 p.m. What to expect tomorrow for the big event so you can be properly positioned. You know where we are right now. This is the place to put on a hedge. You might get squeezed out into the close today. They might run you straight up into 520. There's another place for you to buy more cheap puts. Buy yourself some next Monday 16-cent, 28-cent, 26-cent puts. Close your laptops if you're a bear. I'm a buyer, so I'm not a seller of rips here. We're above the hourly trigger. I'm not that. We're bullish in my view. So, and I'm still a buyer of dips wherever we go. There's nothing here that I don't see us as buyer of dips. Nothing that I've seen. I just see volatility. See volatility this week. We saw it last week. We described it to you on Monday of last week. Every time they come up, we'll get violent drops to the downside. And then as soon as that volatility ends, you should see a period of volume come into the market, and you should see the market go higher. I'm not on crash camp. I'm not on correction camp. There's nothing that I see anywhere right now that leads me to believe that. I would need to see some severe selling for that to happen and take place. All right. So I'll be back with you guys in a little bit. I'll be back before 4 p.m. with some updates. I will give you updates on SPY, QQQs, NVDA if you want it, SMCI, all that kind of stuff. I'll do SPY, Qs, NVDA. I think Tesla's going to be done here in a little bit, so I'll get some Tesla out to you at some point today as well. Cool? Yeah, I don't feel well. I got to tell you guys, I got to be here for you tomorrow, and I don't want to fucking wake up in the morning and not be able to do the show. And I need you to understand how sick I really am. Like, I got a temperature. My temperature's like fucking over 100 degrees, and I'm fucking dying here. And I really apologize to be sick right now in a very important market moment for you. So I'm going to take breaks when I need to be able to be here for you streaming the rest of this week so we can navigate the dangers presented to us as the week progresses. Yeah. I'm going to carry you guys through this shit, dude. Carry you guys. I really feel like I want to say something to you guys. Something I wasn't able to do prior to the website launch was like be here for you. And now I have the time to be here for you. Like I can write you the briefs. I can spend the time. So I really appreciate the ability to do more of this more comprehensively day in, day out. It makes me happier. I don't know why, but it just makes me happier. All right. I'll be here with you, back with you here shortly. It's 1:48 p.m. Again, be careful of the 2 p.m. manipulation that happens in the market. If you don't know what I'm talking about with the 2 p.m. manipulation in the marketplace, get inside the Discord and ask David AMS. Ask him in the general chat, ask him in the pro chat, and see what he has to say about it. Okay? And I from my perspective, what he's going to say is likely going to be what I will tell you here right now. I have no interest in trading this as a bull here. There's would be interest above this zone we're trading. Let me explain it better to you if I can go down the bottom right-hand side over here. So just down in here, right? There's a lot of money to be made in here, right? There's a lot of money down in here, right? You got, you're making money, you're getting the pullback. You're making money, getting the pullback. Making the money, getting the pullback. Getting the money, pullback, right? Making the money, and do we get another pullback? You want to be trading those extremes? Now, if you're like, well, what if we start heading higher here, right? That's okay. We can trade that. But let's look at it to trade it. So how do we trade that? If there's a breakout to the upside, how do we trade the breakout? Right? It's most certainly is not right here. It is most certainly not right here. This is the danger zone for a bull. And you might be saying, what does that mean, Cap? How do we do that, right? So you have the local resistance back here. This is your previous high, right? Let's draw that in. You can do this at home. Follow me at home with this. You got this nice little previous high up here, right? You can see it right there, right? This is red. That's red. So you're looking for price to get higher, right? But not just get higher. It's not good enough getting the new high, is it? You have to get the new high, right? That's 51.99. 5,200, right? You get the new high. Still not good enough to take the trade. You want to see the pullback down here, right? Come back down to 51.80. You want to see 1, 2, right? And then a new high right there. You need to actually see this whole thing happen. 1, right? Then the new high. When you get that new high right there, not just this previous high, but this new high, there's usually a pullback. This would be where you'd see the hourly trigger come up. This is the one where we have continuation to the upside for days and days and days and days and weeks. You might be like, oh, Cap, like I missed all this trade in here and I missed all that trade right there. But I can show it to you. You get days and weeks ahead of you of like a 70% chance of continuation of the upside. These are very good probabilities. Like every time we come back, I'm going to buy a dip. I know it's going to hold, and we're going to go up. And we're going to start trading 530, 535, 550, and all this other shit up here. Like if you want to trade all this shit up here, you know, all this right here, this is the meat of the trade, here to here. Not this bullshit. Does that make sense to you? It's like this shit doesn't mean anything. Now that is some sexy trading right there. Big money. Cha-ching. Big money, safety, whole 9 yards, trading 5,300. In here is where you get the vol. A very dangerous place to be long. So if you're not going to trade that, if you go to the Discord and ask David AMS, he's going to tell you, fuck no. He's going to be like, fuck no, I'm buying this down here. It's worked so many times. Worked there, worked there, worked there. I'm looking to come in here and buy that breakout right there. And he's going to tell you, or I'm waiting to get above this and consolidate and turn this into support. Does that make sense? And then, fuck yeah, we're going to do another trade to the upside. So right now, where we are is very dangerous for you as a bull to be taking a trade right here. You understand me? Listen to me closely. If you don't understand this, even after going it right now at this moment, I'm going to ask you to go into the Discord and ask him. Ask David AM, ask who else do I trust in there? John L., you can ask him. You can ask any of the mentors, the moderators. They should have a firm understanding or grasp of this. So just be wary here of being a bull. Make sense? You want to make the VIX great again. Yeah, I'm with you on that. I think there's one more trade here. Uncle JBJ. I think there's one more like vol trade. You get you one more chance. You get till tomorrow. Hey, what's going on, short seller? Good morning, my man, or good afternoon. I apologize. I'm really sick, brother. Like violently ill. Kids have got me. Like they got me. The fucking kids got me. Again. These kids are dirty, man. They are so nasty. I was watching them at that dance, and I'm like, they're disgusting. Disgusting. Like, they don't wash their hands. They go in the bathrooms. They share candy and stuff. Yeah, dude, I've been sick, man. Like, I got sick on Friday, and it got worse. And Sunday came, throwing up everywhere. Like, I got temperature. Went to the doctor. It's getting worse and worse. Oh yeah, I've thrown up, dude. Just threw up like a puff. I threw up about half an hour ago on stream. Well, not. I turned the stream on pause while I did it. Did you catch all that, short seller, about where we are? Not the place to be a bull here. Need to get above and make a support zone. If not, the vol crowd is trying to buy some vol one more time. Yeah. Velo is saying the same thing. It's not saying crash, but Velocity is saying that there's likely one more. We've got a squeeze coming on our hand. It's saying we've got a squeeze potential, and it's also saying that there's one more chance here for vol buyers into tomorrow. Yeah, be wary, dude. We're not just wary, but you want to get above. Here's the SPX. You want to get above 5180, brother, and make that support first before you start the next leg up for bulls to 50 to 300. I'm gonna fucking puke right now, man. Yeah, velocity is very sketchy right now on the daily trigger. It's not supportive. If we go down and test it, we'll blast through it. It's not supportive right now. Its support is like at 50% strength. You got your 3 targets above here too. I'm gonna fucking get ill, man. Let me just put that right there for you. Oh yeah. They said I could get kicked off Twitch or something if I puke. I was gonna puke on screen earlier. Someone was like, "Don't do it. You'll get they'll kick you off for a week or something." And there goes Captain, gone for a week from streaming. All right, so I will see you guys. I'm gonna take a break. I'm gonna be back with you guys before 4 p.m. I need to get some fresh air. I need to go outside and breathe air. So I'm gonna take a quick break to try to not throw up. And I'll be back with you before 4 p.m. with more trades for tomorrow. You guys already have the trades for tomorrow right now. This is the place to buy vol. Puts are dirt fucking cheap. 16 cents for 5,000 for Friday. I don't know why the fuck you can't buy those. There's no reason you can't afford. If you guys are trading big money out there. Trading a 16-cent put, no fucking brainer. Yeah. I'm going to throw up right now. I'll be back in just a little bit with you guys.
begins here.
Good afternoon, everybody, and welcome to Power Lunch alongside Leslie Picker. I'm Tyler Matheson. Nice to have you with us today, and nice to have you with us today. Once again, two big stories dominating the market. That would be Nvidia and the Fed. But let's start with a check on the markets right now. They are higher across the board. The Dow getting a boost from Home Depot, which was initiated at buy at Mizuho. McDonald's higher by nearly 2%. After announcing CEO Chris Kempinski is going to add the chairman title to his accolades.
Despite the excitement surrounding Nvidia, the stock up less than 1% today, and other chip stocks are lower, including a big drop in Supermicro as it plans to sell more shares. And a big jump in Fusion Pharmaceuticals, up nearly 100% today. AstraZeneca offering to buy the company for $2 billion plus another $400 million if milestones are achieved. Fusion is working on new ways to target cancer cells.
And with just 24 hours until we hear from the Fed, that is where we're going to start today. So what will the Fed do and when will they do it? The latest CNBC survey showing the economists, strategists, and fund managers polled expect 3 rate cuts this year, with the first coming in June. Our next guest is in that 3-cut camp, but with a possibility of only 2. Let's bring in Stephen Stanley. Chief, you just saw him come in there, didn't you? You saw him shadow. You saw the shadow of Stephen Stanley, chief economist with Santander. Welcome, Stephen. Good to have you with us. Nice entrance.
Thank you.
Really well
Smooth,
done. Smooth, really
That
good.
was like a soft landing.
That was a soft landing.
There we go.
Close. Are we going to have a soft landing?
Just giving you a little illustration.
Yeah, that's how you do it. We're going to have one?
I think so, yeah. It looks like the Fed, so far, so good. I mean, I think we still have a ways to go on inflation. So it's too soon to declare victory, but I don't think we're going to have a recession.
And where were you a year ago? Were you in the camp that believed that a recession was likely either in 23 or in 24, and have you changed?
No, I was always a soft landing guy. I think I would say...
You strike me as a harder landing kind of guy.
I think I would say that we've had better luck with inflation than I thought. I thought inflation might be even higher than what we've seen. Of course, as I said, we've still got a ways to go, but I think the Fed's made a lot of ground on that front.
Do you think the Fed is going to cut rates aggressively this year or modestly this year? In other words, I would call 3 or more cuts aggressive, fewer than 3 modestly.
Yeah, so I think their plan is probably still going to be 3. You know, when we get the dot projections tomorrow, I think that they're going to stick at 3 for the year. I actually, I have them moving later than where most people think. I don't think they get started until November. So I only have 2 this year, but then, you know, quite a number next year. I think they will cut pretty steadily next year.
Do you think that those cuts coincide with potentially reduction in their quantitative tightening program in terms of just the magnitude by which they're rolling off that balance sheet?
Yeah, I think if it does, it'll be a coincidence. I think that they're trying to run those 2 on separate tracks. They've said it's very possible that they could continue to cut the balance sheet at the same time that they're easing, even though those 2 things seem to be at odds with each other. So I think the balance sheet will be determined by their view about how much, where bank reserves are relative to where they need to be. And as long as there's excess liquidity in the system, I think they'll keep going with quantitative tightening.
How much do other forms of credit versus the traditional banking system play into that? I ask because coinciding with this tightening campaign, we've seen this huge rise in private credit. Does that kind of do a disservice to the efforts that they are making in terms of quantitative tightening?
Well, I think it makes the Fed's job a lot harder. And I guess in some ways it's not altogether surprising that, we saw a big crackdown in terms of banking regulation after the financial crisis, as you would expect. And what happens, more of the credit universe has moved outside of that tight regulatory environment.
Are you worried at all? You said earlier that inflation has come down maybe more pleasantly than you had expected initially. Are you at all worried about some of the recent inflation numbers that indicate maybe it's not a straight line down to 2%?
Yeah, I think people got a little ahead of themselves, or a lot of people did, in terms of inflation. We did have some low numbers in the core inflation figures late last year. I think what we're seeing is more of a normalization to where the trend is. I think the trend is probably 3.5, and on its way down. But we may be felt like we were, I think people got a little ahead of where we actually were last year.
Do you think corporate profits are going to be strong enough to support a market that may not have the aggressive rate cuts that some had anticipated?
Yeah, I mean, that's been the big surprise, right? The economy has done very well. Yep. Very good economic performance last year, and that's been accompanied by solid profits. So every quarter, equity analysts get worried about the earnings numbers, and then the earnings always seem to exceed expectations. So,
Stephen, thank you very much. That's great. Appreciate it. Stephen Stanley. He's a soft landing guy.
Both metaphorically and physically. So as Wall Street tries to predict what the Fed will do next, how should you position your portfolio? Let's bring in Jim Tierney, CIO, Concentrated U.S. Growth within AllianceBernstein. Thanks for being here. So let's start there. How should you be positioning your portfolio?
If we do believe in higher for longer and a stronger economy, I think you have to start thinking outside of AI, who can benefit from that reality? And there are a bunch of companies that are benefiting from it and will continue, and they really haven't been recognized in the market yet. So I think there's a real opportunity.
Like what?
One is ADP. When you look at ADP, a significant portion of their growth over the next couple of years will come from float income. With an average duration of their portfolio over 3 years, it takes time for that portfolio to reprice higher in terms of the securities. And when that happens, that's almost 100% margin dollars that fall to the bottom line. So that's a great opportunity.
In terms of the potential risks to that, as you look at the more momentum-based trades versus those that may be unappreciated right now, how do you see the risk-reward payoff looking, say, over the next 6 months, as we may see some reduction in rates, a different picture on the monetary policy backdrop? Does that dynamic shift at all in your thinking of kind of where you see underappreciation in the market?
I think earnings are going to be incredibly important in 2024. They weren't quite as much in 2023. Certainly, there was a huge spread between the Magnificent Seven and everything else. As that spread narrows, I think investors are going to start looking for what are the companies that have great earnings prospects. And you look at ADP growing 14 or 15% last year, around 13% this year. I think that's a great opportunity. You look at a company like Cooper Companies that makes contact lenses. They grew 10% last year, probably grow 12% this year. That's really strong growth, well above what the market's doing. And a couple of these companies have just been ignored so far. So to me, that's the opportunity.
A third company you like is Constellation Brands. I guess there's some skepticism that they're going to be able to match their growth numbers from last year, but you disagree with that.
I don't think they saw quite the benefit from the Bud Light share loss that everybody pins on it. Constellation has been benefiting from a trend of consumers buying more Mexican beer for well more than a decade. And I think that continues. The knock on the company for years has been their capital allocation. The fact that there are now some guardrails with a couple of new board members and an activist investor involved, I think means very positive things for capital return to shareholders, particularly as they have now delevered the balance sheet.
As we look ahead to the Fed, I know that you're focused on financials and specifically credit quality against this backdrop of higher for longer. At what point do you see things deteriorating to the point where the Fed may need to call an audible with regard to its tightening conditions?
It's a great question. And if you look at some of the credit statistics, we've seen some worsening of conditions, yet it hasn't become a full-fledged panic. And I think that's one of the things that the Fed has to be monitoring in terms of, do we cut to preempt any kind of worsening?
How are you thinking about the AI-related sector or the AI companies? Anything that has AI in its name seems to be attracting a lot of money. Are you chasing that trend or not?
We don't love to chase anything. We certainly have some names in our portfolio that are exposed to that. Microsoft would be an example. Amphenol would be another example, and Eaton would be an example in terms of they're all involved in one way or another and seeing really nice benefits from that exposure. I think the rubber is going to hit the road later on this year when investors ask who really will see an earnings benefit as opposed to just an exposure. And certainly, I think some of the disappointment last week with a company like Adobe in terms of not seeing that benefit immediately, I think more of that's going to happen in the market as investors become a little bit more critical.
As you examine what we've taken to refer to as the Magnificent Seven, are there any of the seven that you would absolutely stay away from?
I wouldn't say that I'd absolutely stay away from anything, but I do think we're starting to see more of an earnings dispersion between the 7 and a differential in performance. And you look at the performance of Nvidia and Meta, which are both spectacular this year, and then you look at the Apples and the Alphabets and the Teslas, which aren't quite as good. As a high active share investor, I like dispersion because you can pick winners and pick losers. So I'm much more pleased with the environment in 2024 than what we saw in 2023, where all boats were rising.
Yeah, have to be choosy in that category, certainly, and elsewhere in the market. Jim Tierney, thank you very much. We appreciate it. And coming up, speaking of, Nvidia holding an AI conference in California. Did you hear about that? Laying out its plans for the future to investors. We will share some key takeaways in Tech Check. More Power Lunch coming up next.
Welcome back. Shares of Nvidia turned around and are up slightly today, the second day of its hotly watched AI Developers Conference. Deirdre Bosa joins us live from the conference for today's Tech Check. Hey, Dee.
Hey, Leslie. So day one, it was all about Jensen's keynote. Day two, we're hearing from key players throughout the NVIDIA ecosystem, and there are many.
If you look at the things that we do, we build the chips, the systems, the networking, and so on and so forth, the entire data center practically. all the software that goes into it. And then we sell it in parts. The reason why we sell, and that is what confuses people. They think that NVIDIA is a chip company because we sell everything in parts.
Right.
The reason we do that is so that our customers could integrate NVIDIA's technology into their data centers however they like.
So attendees here, they range from the buzziest Gen AI startups to the cloud hyperscalers to the academic pioneers of AI, really living up to its title as the Woodstock of AI. There's a panel tomorrow that was the brainchild of Jensen Huang himself that he will also moderate. It brings together key figures in the Gen AI space that co-authored a seminal academic paper years ago and then went on to found current darlings like Cohere and Character.ai. I just left a session with OpenAI COO Brad Lightcap on the future of AI. He ended it by saying that 10 years from now, if you hand a kid a laptop from our current era, he or she will try to talk at it, kind of like how kids in the iPad era try to swipe on any screen that they see. So yes, the big announcement here of GTC is the efficiency and power of NVIDIA's Blackwell platform, but perhaps just as important are the startups and the companies and the individuals that are here that will be building and developing using it. That said, guys, everyone wants a piece of that NVIDIA halo, which has become so powerful. It makes sense to have a presence here at GTC. One essential ingredient that is very clear is the talent and getting the right researchers, engineers, data scientists. Some of these panels, they operate almost as recruiting tools. Guys, another reminder of how important that is today with that big move to Microsoft hiring a DeepMind co-founder as its head of AI.
And I'm sure at this point in time, there's probably nascent availability of people who are experts in this area because the technology itself is so nascent. That's interesting that it serves as a kind of recruiting platform there. And also interesting, and it's the perfect kind of microcosm of just the flywheel effect that we're seeing from this AI rising tide lifting all boats. How much discussion is there, though, about protections, having in place a sense of guardrails for this industry? Has that been a key topic at all?
You know what? I would say this is more of a developer conference. While that is close to the top of many people's mind here, there was a little bit of that in the OpenAI session. They talked about building for the good of all humanity, which is, of course, the OpenAI mission. But kind of, this is very a technologist conference, right? There's a lot of developers here that are just optimistic and eager to start building. I made the comparison to Apple's WWDC, right? When the App Store was becoming the behemoth and just this critical tool that it is now for developers, that's sort of what's happening here. You see developers and companies from all different industries just focus on what is going to be the killer application or hardware or whatever it is. But certainly in the background, there is sort of the ethical questions that many will have to confront and are confronting now.
All right, Deirdre, thank you very much. We appreciate it. Deirdre Bosa reporting from California. All right, NVIDIA's stock up today, pairing earlier losses as investors seem to shrug off the launch of its new Blackwell GPU. Our next guest, too, is not convinced the chip will boost sales enough for the company to maintain growth. His price target of $620 is the lowest on the street and is more than 30% below NVIDIA's current price. Let's welcome Gil Luria, Senior Software Analyst at D.A. Davidson. Gil, welcome. Good to have you with us. Why do you think this stock could go from where it is today in the high 800s down to 620? What's the problem?
Well, I have a lot of cognitive dissonance around NVIDIA. This year, they are going to have a fantastic year. If you talk to their customers, and they really only have 5 big customers that represent more than 2/3 of their revenue, they'll tell you they're going to buy a lot more GPUs this year, whether the existing generation or the Blackwell. This year is going to be great. That's why NVIDIA can have so much confidence guiding one quarter at a time. Our numbers for 2026, however, are lower than they are for this year. And if revenue peaks this year or next and starts declining from there, the stock won't be able to hold on to these multiples. So these multiples right now make a lot of sense if you're just looking at this year and where that trajectory is. If you start looking at where we're going to be in a couple of years, it gets a lot trickier justifying these types of valuations.
When you say 2026, are you talking about their fiscal year or the calendar year? In other words, is it 2 years until we start to see what you think will be a slowdown?
The slowdown is probably going to start in the next 4 to 6 quarters, but it is 2 years from now that we expect revenue to be down. while this generation of GPUs and the next generation of GPUs is the key to generating all this AI activity, which is why this has been such a celebration of AI at this conference, the technology is moving very fast. I'll break some news for you. Microsoft just released a research paper that says they think they can build a 1-bit LLM, which is to say they can build an LLM that is an order of magnitude more efficient. What that means is we may be running inference on CPUs in a couple of years or on custom chips in a couple of years. These are not NVIDIA's markets. And so if things are moving that fast and the direction they're headed is far more efficient models, it's very hard to have visibility.
So they may be able to build a large language model that operates on a simpler, less NVIDIA dependent chip structure?
Exactly. In fact, it's probably going to run on our device, on a handset or a PC, where NVIDIA's market share is far lower and the cost of the chips is far lower. And that's where we're going to really get the interesting tools. You know, we've talked about Apple. The distance between us, where we are right now with Apple, and Apple having a full-on assistant in our phone is the ability to do inference on the phone, on the handset. And that's where the technology is headed. And NVIDIA's role in that world is much smaller.
So is that where you see the revenue decline stemming from? Competition, not, say, manufacturing capacity, macroeconomic forces like a potential recession? It's purely this competition idea.
It's purely talking to their customers. If you listen to their customers, they'll tell you, we're going to buy as many GPUs as we can this year. We're going to stock up on them because we have a lot of demand for what they're doing for us right now. But going forward, we want to diversify away from NVIDIA. We want to make our own chips that we can rely on, and we're going to develop the technology, the LLM engines and the generative AI engines that require far less compute so we can do a lot more applications and do them at the edge on the device.
Now, are these conversations taking place before this week's announcement, before Blackwell, or is it kind of expected with the new iteration of products that NVIDIA has been announcing?
No, these conversations have been happening because this is such a big exploding market, and NVIDIA's customers are so large and have so many resources. They've been working towards those goals for several months now. And let's not forget that as far as they're concerned, if Blackwell can produce 500% more compute and cost only 50% more, they're going to get compute for a lot cheaper as well. So of course they're happy with the new generation of products, but they're also working on making their models more efficient, so they need less and less compute over time.
So let me come back to something that would occur to me, and that is you just used the phrase, this is an exploding market. There's just a hunger for NVIDIA's chips today. And it is not merely, as you said, a huge percentage of their market is represented by 5 buyers, but there are lots of others who are either going to start buying or are coming on stream and presumably will buy. You believe that that sort of mega trend will be more than offset by some other changes in the dynamics of this market, so their growth must therefore slow. Am I understanding you?
Yes.
Yes?
Yeah, absolutely, Tyler. But beyond that, the 5 buyers that are buying these chips now are the 5 deepest pockets. The smaller companies and even individual governments don't have as much money as Amazon, Apple, Microsoft, Google, and Meta. Those are very deep pockets, and those are buyers that know they can get the return on investment right now because everybody's testing new AI tools and playing in the playground of developing these applications. Once that activity settles down and we start getting on the more gradual ascent of generative AI, then the demand is going to fall for them, and it's going to take a lot of other customers to replace that demand, which isn't to say that generative AI isn't going to be transformational and a huge revolution and the biggest improvement to productivity since the internet. It's just that that's going to take time. And right now we're going through this phase of experimentation. Once that's over and we get into a phase of more gradual building, we may not need as many, there may not be as many customers, and certainly not customers with as deep pockets as the ones that are stocking up right now.
So I want to go back to your price target of $620 per share. You see it's currently trading around $900, so that represents significant downside. But you're telling investors to hold. So do you think that it's going to reach your price target in 12 months, or is it something where you just kind of think investors are more prudent to hang on and see what happens?
Yeah, again, there's a kind of a short and long-term bifurcation here. If all you care about is this year, you're going to get great results out of NVIDIA. They're going to exceed expectations next quarter, and they're going to exceed expectations the quarter after that. That's why the current valuation makes sense if you're applying it to this year's earnings. If you're looking at the 2, 3, 5-year time frame, then you may be looking at an earnings number that's considerably smaller than what it's going to be this year, in which case you're going to want to pay a much lower multiple. So somewhere in the middle between those two time frames is where we sit right now, and we obviously have to revisit that based on what we're learning.
All right, Gil, you've given us a lot to think about. Gil Luria, we thank you. Appreciate it.
Thank you.
And a quick programming note, Jim Cramer will sit down with NVIDIA's CEO Jensen Huang for an exclusive interview on Mad Money. That's tonight at 6 p.m. Eastern Time. You don't want to miss that. That will be an intelligent conversation.
Absolutely. And further ahead, the first major CHIPS Act award package set to be rolled out this week. But for the companies that won the big prize, how much did they spend on lobbying? We'll take a look at that ROI when Power Lunch returns.
Cramer.
Welcome back. Gildan Activewear is currently halted for news pending after a big jump. You see up 10% there to session highs as Canada's Globe and Mail reports the apparel giant has put itself up for sale after receiving interest from private equity funds. We've reached out to the company and we'll keep you updated as we know more.
All right, meantime, Bitcoin pulling back a bit today, trading at about 64,000 or 10,000 below the all-time high it hit just last week. That means volatility. And now the cryptocurrency may be a key player in the Senate race in Ohio, which could pit a crypto bull, get that, pit bull, versus a longtime crypto creator. I don't know where they intended that. Emily Wilkins is in Ohio with more on the crypto candidates. Emily.
Hey, Tyler. Well, yeah, I'm in Ohio, which is, of course, a key battleground state that could decide which party controls the Senate next year. Now, the voters behind me are deciding which Republican is going to be going up against Democratic Senator Sherrod Brown, the head of the Banking Committee, who has pushed for restrictions on crypto. And that has put him in the crosshairs of 3 crypto-backed PACs, which have raised $85 million. Now, this is from Coinbase, from Ripple, Gemini, Anderson Horowitz, and they're planning to play a big role in the 2024 election. Now, these PACs have yet to spend money in Ohio, but a Coinbase-backed advocacy group called Stand with Crypto gave Sherrod Brown an F rating. Meanwhile, one of the Republicans on the ballot today, tech executive and blockchain evangelist Bernie Moreno, has an A rating. And if he wins today, he tells me that crypto will be on the ballot in the Ohio Senate race.
This will be an issue. You mark my words. You talk about 1.2 million people that own crypto here in Ohio, and they look at a guy like Sherrod Brown, this tired career politician that thinks he knows best. This will be an issue that we're going to use against him in this campaign.
Ohio's race will help determine whether Republicans control the Senate next year. And Brown is not the only Democrat in a key state who could be targeted by these crypto groups. Stand with Crypto has also given an F rating to Montana Senator John Tester and Michigan Congresswoman Alyssa Slotkin, 2 other states that are going to be very critical in determining the balance of the Senate. Guys?
All right, Emily, thank you very much. Emily Wilkins reporting.
After the break, an under-the-radar semi-industry play. Teradyne down 5% for the year, but with Nvidia and AI transforming the chip space, could they be in a position to grow? We'll speak with the CEO next.
Oh, shit. They're going to come in here and take every single stop right now. You watch this. They're going to take every single stop. This is a computer right here. This is HAL 9000. Sorry, I'm throwing up here. They're going to take they're going to try to take every one of these stops right here. I don't know if they're going to be successful, but they're trying right now. Well, not they. HAL is trying right now. I'm gonna fucking puke, dude. Like, they're gonna this whole HAL 9000 shit. This is the pain trade. They go up here, and now this can lead to violence to the downside. But a lot of anger from bears at the same time. The pain trade is right there. Again, as said earlier, I'll say it to you again here. So if you were a bear, then you want just a little bit of confirmation that we're actually rolling over. You would want to see a breakdown below the 5-minute trigger, a rejection, blast down below the hourly trigger, and then a rejection. The moment you get that rejection, a new low, we are bearish. So we have not seen that as of yet, have not seen the roll down below the 5-minute trigger, have not seen the rejection and sell down to the hourly trigger, and a new low underneath the hourly trigger with the 5-minute trigger coming over and the 1-minute trigger coming over. This leads to a 3-trigger cluster for bears to take this shit downtown to the daily trigger. We have not seen that yet. Now, can that happen? Sure. I do want you to know here, I need to be very clear with you, that if we do this bad shit up here, right, we go up there and mess with this HAL 9000 shit, It's going to get bumpy. So no whole account stuff, but you know, like something cheap and you want to get involved in this, it's setting up right now.
Our lunch, as we discussed earlier this hour, Nvidia.
It's setting up right now for it's setting up for leave it at violence. Most definitely violence. Creepy crawly up the wally, but stark reversal too. Like you're in this this HAL 9000, this is R4 and 5. These are RTX cells. These are RTX cells on the upside. This whole red box here. So it doesn't, whatever day of the week it is, doesn't really matter. If we go up there, it gets an auto sell. So there's violence here, there's violence here, and there's most definitely violence up here. This is a massive pain trade, and you're gonna piss off some people if you go up there. Probably liquidity providers. Piss off like Carl Icahn or something. He'll be out there calling like the desk jockey saying, sell $5 billion right now. The old gym bros. These are the pros right here. These are what the old gym bros are pros. This is where they come in to short the market on the regular, to grab their cup of coffee. They put their short on, and they're good to go, right? They don't care what you're going to do. They don't care how high you're going to push it. They're waiting for that roll back down either way. They're scared though right now. These guys are stinky. They're not scared. They're probably on Twitter right now. They're probably on Twitter right now, and they're on Twitter and they're like, God damn, I don't know what they say. Like, I don't like the birds today. I don't like the sky being blue. They're probably all salty right now, these guys. These are the old guys. They make a perfect trade every time. So they're getting angry right now that we're back up here, looking to take out their stops. And that's where their stops are. Their stops are right here. Their stops are right here. Right here. And this is the one where they get pissed off. That's HAL 9000 for the win. Do I think we get a roll here? Yeah, I do. I think we get a roll regardless of outcome, whether we squeeze up here, all the way up here. There's a roll there. Or we roll straight back down. You already got my take. No changes. Nothing's changed here. Absolutely nothing's changed. Absolutely nothing's changed here. The old gym bros, I go with these guys right here every time. These guys got their shorts on. They're going to hopefully they're closing their laptops right now. And they're going back down to their bunker. They have locked themselves up. They've chained themselves to a wall somewhere. They got the full wolf hair coming out. Does this not look like consolidation? That's a good question. Does this look like consolidation? That's a good question. Hold on, let's check. That's a good question, actually. Does this look like consolidation right now? No. No, it fucking doesn't. I'll say it again like I said it earlier. I'll show it to you one more time. I can see that some of you are here and some of you are not. That's fine. I'll show it to you one more time. It's a good question, by the way. Does that look like consolidation? No, it doesn't. It's a great question. So right up there, you can see that that's 51.91. Okay. So again, we're back to 520 on SPY, right? Think of that in your brain. Be like, okay, I got Cap's got 520 as a big red box up there, right? Oh, you're going to go back and forth really quick, right? I'll go back and forth. Whoop. See it right there? 519, 520. See all that up there? Okay, so on the bottom right screener, right, we're going to go back here and look at this, okay? So does this look like consolidation to me? No. And it's a great question, by the way. What you need to have here, this is your local resistance right here, right? You need to have the squeeze up, right? So you get your squeeze up, and then you need to consolidate. Listen to me very closely. It's very important, okay? Consolidate, 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 okay? That's it. That's all you're looking. If you're a bull, that's what you're looking for. Now, are you bullish there? The answer is still no. You still have a low probability of winning. So it's like this whole move right here, right, is still a low probability of us going higher. You need to have the first, after the consolidation, you need to break the prior high. And you will come back down. I know you don't believe that, but you will. You will come back down. The hourly trigger will come up to you. This is in yellow right now, but if it was in green, you would see the hourly. Whoop. You would see the hourly. Wait a minute. What's going on here? Got some funky shit going on. You would see the hourly trigger come up. You would back test this successfully. There's your squeeze higher. There's your back test down, confirmation. And the moment that you get this prior high, this would be a trip that would last days, week, whatever to get to 530. Price before time. Time could be a week, could be a day, could be a month. But this whole structure here, you would need for the consolidation you're talking about to get to 5,300 up here. Okay? So just so you might think in your brain right now, you may be like, oh, yeah, this is the biggest part of the trade. But it isn't. It's actually the smallest part of the next stage of a trade. So you would consolidate, catch the new high, come back down, and then that would open up your 530 and this 520 to go up there. This is where the money is, by the way. This is where the volatility is, right there. Does that help? Hopefully, I think I've described it twice or three times to you. So right now, no. Do I think we're consolidating? Absolutely fucking not. The only thing that we need to do is to either in cash market or in the overnight. A lot of times you can't get this done in cash market. So you'll always hear about this happening, not always, but oftentimes they'll creepy crawly and upper wally when you're not paying attention in cash market, or they'll do it in the after hours. And they'll put price up there to see how it sits. So like they would send us up there. If you can't get it done in cash, they'll do it in overnight. They'll put us up here and they'll say to you, all right, we put price where you think it should be. Right? We put the price where you think it should be. Now you guys have to buy a bunch of calls for not 530. You have to buy calls for 550 and 560 to get to 530. Does that make sense? Hopefully it does make some sense to you. So we're in this next phase, but this next phase is like all of this work right here is to create a new level and some consolidation to trade 530, 535. Now, I can assume too out here that a lot of you don't get the pro trader subscription, because if you have the pro trader subscription, you already know where I think we're going. You already have the my targets. You already know that I think 596. You already know that I think in this run alone we get 535. You know that I think that we come back down off of 535 and then we get 550, 560. And then you know that we come back down off 550, 560 and we get 590. I'm not joking with those calls either. Some of you don't pay for that, so I don't know exactly what to say to you about what I think or what I don't think, that kind of stuff. If you think what I think over time. I'm going back to the break right now again. I have to get off. Because the more that I speak, the more I want to throw up, and I want to throw up pretty fucking bad. Like every time I'm talking, it's like throw up, throw up, throw up. Now I'll be back with you here for a trade before 4 p.m. Give me a few minutes, and I'm working on a trade for you right now, and I'll be back with you guys with expectations for tomorrow. Give me just 5 more minutes. My Twitch is down right now.